Good morning, students, and welcome you all on the second day of financial reporting subject of CA final. So, friends, I am CA Alok Garg, and in the last session, we discussed about overview of Ind AS and roadmap for applicability of Ind AS, right? So, today we are going to discuss introduction of Division 2 to Schedule 3, and we will also start Ind AS 1, which is on presentation of financial statement. So there are two agenda for the day. One, to complete introduction to division 2 to schedule 3 and to start Ind AS 1. So we will cover this Ind AS 1 in two classes today and day after tomorrow. Few of the students have joined on the Zoom link and many students are attending this session on YouTube. So you have that query portal, right? Whomsoever have joined on chat box on this Zoom link, so they can raise their query on the chat box, right? In the last half an hour, students are allowed to ask their queries by unmuting themselves. So please do that. If you have any query, we will be happy to discuss. We will happy to resolve the query by unmuting you, right? But for the next 2.5 hours, please raise your query on the chat box or on that query portal, right? So I'll read that relevant queries and I'll resolve those queries. So let's start the session. Friends, first of all, if I talk about the format of the financial statement, because Schedule 3 of the Companies Act only provides format of the financial statement, right? And as discussed in the last class, we have three divisions of Schedule 3, Division 1, Division 2, and Division 3, right? How these divisions are allocated to the format of the financial statement. Division 1 deals with those companies who are still preparing their accounts under IGAP. IGAP means old accounting standards, right? So Division 1 to Schedule 3 is not relevant for our discussion in CA final. Division 2 to Schedule 3 is applicable to those companies who are preparing their financial statement under Indian accounting standard. Our financial reporting paper is largely based on Indian accounting standard, right? So division 2 to schedule 3 is relevant for CA final curriculum. Okay. Now the third one is division 3 to schedule 3. Division 3 to schedule 3 is also applicable to the companies on which Ind AS is applicable. Sir, you are saying division 2 is also applicable to Ind AS, division 3 is also applicable to Ind AS companies, but the only difference is Division 2 is applicable to the normal companies. Division 3 is applicable to the NBFC companies. Sir, what is meant by normal companies? Means other than NBFC companies. For example, Infosys, TCS, Reliance, Bharti Airtel, Nestle, ITC, okay, Ambuja Cement, Ultratech Cements. On all these companies, Division 2 to Schedule 3 is applicable. But if I talk about Bajaj Finance Limited, Bajaj Finserv Limited, Muthoot Fincorp Limited, Shriram Transport and Finance Company Limited. These are the NBFC companies. On these companies, Division 3 to Schedule 3 is applicable. From the CA final perspective, only Division 2 is part of the syllabus, right? So you are required to understand Division 2. And as far as understanding is concerned, so we will discuss the introduction of Division 2 to Schedule 3, right? Friends, the second aspect, number one, is Schedule 3. The second aspect is whenever we talk about financial statement, right? In our old accounting standard, there was no any accounting standard which talks about the financial statement. For example, AS1. AS1 was only dealing with the disclosure of accounting policies. And accounting policies are one of the subset of notes to accounts. Notes to accounts are one of the component of the financial statement, right? But in Ind AS, there is a Ind AS 1, which we are going to start today. Indian Accounting Standard 1 deals with the presentation of financial statement. Means any student or any chartered accountant who is preparing the financial statement or who is auditing the financial statement, for him or her, Division 2 to Schedule 3 as well as Ind AS 1 is very important, right? In our accounting standard days, only Division 1 to Schedule 3 was important. Only Schedule 3 was important because there was no accounting standard which talks about the financial statement. But now under Ind AS 1 talks about the presentation of financial statement. So division 2 along with Ind AS 1, both are relevant for the preparation and presentation of financial statement. The second aspect is Ind AS 7, which is a separate standard which has to be covered separately. So this Ind AS 7 talks about statement of cash flows, right? Friends, cash flow statement has not been given in division 1, 2, 3 of schedule 3. So schedule 3 does not gives you the format of cash flow statement, right? So the guidance of cash flow statement comes from Ind AS 7. Okay, so this is the another standard which deals with one of the component of the financial statement, and cash flow statement is one of the component of the financial statement, correct? So this is the entire structure of financial statement presentation and format. So we will discuss division 2 to schedule 3, and then we will start Ind AS 1, which deals with presentation of financial statements. Correct? Moving to the next slide, friends. When we talk about financial statement, can anyone quickly write on the chat box or on that query portal that what are the component of the financial statement? Balance sheet, right? Profit and loss, okay? Cash flow, notes to accounts. These were the four components of the financial statement under accounting standard, under IGAP. Under Ind AS, there is one more component of the financial statement. What is that? One more component of the financial statement is there. Can you name that new component of the financial statement? Can you please name that new component of the financial statement? Yeah. Yes. So one of the participants is saying, sir, statement of changes in equity. You're right, Priyanshi. It's statement of changes in equity. And what is that statement of changes in equity? It gives you movement in share capital and movement in reserves and surplus. We are going to discuss this in detail, right? But for the time being, we have five components of the financial statement, balance sheet, and all are aware about the balance sheet. Statement of profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts. Notes to accounts includes accounting policies as well. Friends, the balance sheet related format and guidance is given under Schedule 3 and Ind AS 1. So friends, whenever I am talking about Schedule 3, from the Ind AS perspective, I am talking about Division 2 to Schedule 3. I hope that is clear to everyone. Division 2 to Schedule 3. Okay? Because there are three divisions in Schedule 3. Division 1, Division 2, Division 3. For our academic purposes, for our practical purposes, only Division 2 is relevant. Statement of profit and loss. Again, the guidance, the format is given under Schedule 3. And of course, we need to deal with Ind AS 1 also. Statement of changes in equity. In addition to Schedule 3 gives the format, but Ind AS 1 also provides the guidance on statement of changes in equity. Statement of cash flows. Neither Schedule 3 nor Ind AS 1 deals with the statement of cash flows. Only Ind AS 7 deals with the statement of cash flow. Schedule 3 only says that you need to prepare a statement of cash flows. But what is the format? What is the guidance? Schedule 3 does not provide the guidance and the format of statement of cash flows. Likewise, Ind AS 1 only says that statement of cash flow is one of the component of the financial statement, and you need to prepare the statement of cash flows in accordance with Ind AS 7. These are the two lines which have been mentioned in Ind AS 1, right? So Ind AS 7 provides the guidance about statement of cash flows. Notes to accounts. So friends, you know, in notes to accounts, your accounting policies are covered. Your balance sheet related notes, your P&L related notes, notes means breakups, schedule, and the other disclosure like related party disclosure, segment reporting, actuarial related disclosure, contingent liability, capital commitment. All these disclosures are dealt by the respective standards. Okay. For example, related party disclosure, there is a separate standard, Ind AS 24. Segment reporting, there is a separate standard, Ind AS 108, right? So friends, as far as notes to accounts is concerned, Schedule 3 deals with the format of the notes to accounts, because whenever I'm talking about balance sheet related schedules, P&L related schedules, for example, borrowings, Schedule 3 says that borrowing has to be presented as a secured borrowing and unsecured borrowing, right? Then it says that in terms of borrowing, you need to disclose term loan, working capital loan, others, loan taken from promoters, etc., etc. So Schedule 3 gives you the format of balance sheet related schedules and P&L related schedules, right? And some other disclosures as well. Okay. For example, Schedule 3 talks about providing the aging of CWIP, aging of trade receivable, aging of trade payable, right? If there are immovable properties and title deed is not in the name of the company, then Schedule 3 provides a disclosure. Schedule 3 provides the disclosure of shareholding, right? Shareholding, movement in shareholding, movement in promoters holding. So these all disclosures are required by Division 2 to Schedule 3. And the other Ind AS, right? And all other Ind AS also talks about the respective disclosures in the financial statement. So this is the entire structure, right? That what Ind AS deals with, what Schedule 3 deals with. I believe everyone is clear on this, right? Is that clear? Is that clear or clear? Clear? So I can see a lot of participants have joined. Abrakesh, Anita, Bindu, Somiranjan, Prashant. Great. So let's move on, friends. We talked about the structure, right? That what Schedule 3 deals with in terms of component of financial statement and what Ind AS deals with in terms of component of financial statement, right? This is what we discussed so far. Now, friends, we are going to discuss the introduction of Division 2 to Schedule 3. And friends, I have total 17 questions. These 17 questions, the entire universe of Schedule 3, Division 2 to Schedule 3, right? And of course, I'll also share the answers of all these 17 questions, right? As a class notes. Not to worry about that. I will share that. Okay. Am I audible clearly? Am I audible, friends? Okay. Yes. Question number 1. Schedule 3 is applicable to companies only, or it is applicable to non-corporate as well? Tell me whether it is applicable to companies only or it is applicable to non-corporate as well. Non-corporate means sole proprietorship, partnership, Hindu undivided family, trust, body of individuals, right? It is only applicable to, it is only applicable to companies. Yes, you are right, Chandra. It is applicable to company because this Schedule 3 is part of Companies Act. Very good. Very good. So Schedule 3 is only applicable to companies, right? It is not applicable to non-corporate entities. How many divisions to Schedule 3 is there? Just 5 minutes ago, I told you that how many divisions of Schedule 3 is there and what is the applicability. Very good. There are 3. You are right, Abrakesh. There are 3 divisions of Schedule 3. Division 1 is applicable to the companies who are applying accounting standard, which is IGAP. Division 2 is applicable to the companies on which Ind AS is applicable. Division 3 is applicable to the NBFC companies on which Ind AS is applicable. Very good. Question number 3. When did Division 2 to Schedule 3 was notified? When did Division 2 to Schedule 3 was notified? So friends, Division 2 to Schedule 3 was notified on 6 April 2016. So Abrakesh, on 16 February 2015, Ind AS were notified. On 6 April 2016, Division 2 to Schedule 3 was notified. And then it was amended on 11 October 2018, right? And again, it was again amended on 24th March 2021. So the recent amendment in Schedule 3 was on 24th March 2021, right? So friends, it was notified on 6th April 2016. Then it was further amended on 11 October 2018, and then it was further amended on 24th March 2021. And 24th March 2021 was the major amendment, right? And on 24 March 2021, the amendment was happened in all the divisions of Schedule 3, right? Great. So whether Schedule 3 got amended post originally notified, I have already answered the question number 4. Yes, Schedule 3 got amended after original notification dated 6 April 2016. If yes, when was the major amendment happened? So the major amendment happened on 24th March 2021. So just give me a second. Let me put the mic. Well, now, am I audible? Okay. Yes. Question number 5. Whether Schedule 3 is applicable to standalone financials or it is also applicable to consolidated financials. Sumit Jain is saying both. You are right, Sumit. So Schedule 3 is applicable to standalone as well as consolidated financial. It is applicable to both. Students, I would request each one of you that please write down the answers also. Although I'll provide the answers of these questions but please write down in your notebook as well. Question number 6. Whether requirement of Schedule 3 need to be strictly followed, or if there is any requirement of Ind AS and Companies Act 2013, can the Schedule 3 requirement needs to be modified? So friends, in Schedule 3, some requirements are given for disclosure presentation, right? And Schedule 3 says that you have to disclose a particular item in a particular fashion. But if Ind AS requires something more or Companies Act requires something more, so can the Schedule 3 requirement need to be modified, or we need to strictly follow only requirement of Schedule 3 for the purpose of preparation of financial statement? What's your view? What is your view? Yes. And Schedule 3 says that whatever requirement is given by me, it's a minimum requirement. Schedule 3 says that whatever requirement is given by me, it's a minimum requirement. If there is some additional requirement by any Ind AS or by any statute, you have to follow that also, right? If there is a conflict between Schedule 3 and Ind AS, which will prevail? Let's say Schedule 3 says that you have to report in a X manner, but Ind AS says that you have to report in Y manner. Then who will prevail? Of course, Ind AS will prevail. And I'll give you a classic example here. Schedule 3 says that in case of revaluation of fixed assets, in case of revaluation of property, plant and equipment, if the if after the revaluation, the carrying value becomes more than 10% of the opening value, the closing value is more than 10% of the opening value, right? Let's say the opening carrying value was 100 rupees, but after the revaluation, it becomes 110 rupees or 111 rupees, right? So if the difference is more than 10% in due to revaluation, then you are required to provide some disclosures as per Division 2 to Schedule 3. But when you read Ind AS 16, Property, Plant and Equipment Standard, it says that whenever there is revaluation, you have to provide these kind of disclosures, right? So Schedule 3 only talks about those disclosure when the difference is more than 10% due to revaluation. But in Ind AS, this 10% threshold has not been given. What does it mean? It means if you are doing a revaluation, and there is a upside of only 1% or let's say 0.5%, still you are required to give those disclosure as per Ind AS, right? There is a conflict. Schedule 3 says that 10% से ज़्यादा. Ind AS says that if you are doing revaluation, you have to give this sort of disclosures. So who will prevail? Of course, Ind AS will prevail, right? And you have to provide the disclosures if there is a revaluation, irrespective of the fact that the difference due to revaluation, increase in the value of the asset due to revaluation is less than the 10%, right? Is that clear? Any doubt? Any doubt on the 7 questions? Pretty straightforward questions and pretty straightforward answers as well. Okay. So let's go to the question number 8. This is the entire universe of division 2 to schedule 3, right? Whether any act or regulation requires a specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those required under Ind AS schedule 3. Yes. For example, if you have seen the financial statement, you must have seen the disclosures of MSME entities, disclosure of MSME, right? These MSME disclosures is as per MSME Act 2006, right? So friends, in terms of income tax, when you prepare a financial statement, income tax is also applicable, right? So there could be some disclosures in accordance with Income Tax Act. For example, you are preparing ATR, although this disclosure is from Ind AS 12, but effective tax rate you have to use income tax. Okay. So friends, if there is a requirement of any other statute or if there is a requirement of any act or regulation in addition to the schedule 3 requirement, right? So whether you will disclose all those things, of course answer is yes, of course you have to disclose, right? So the only crux of the story is the requirement of schedule 3 is not the maximum requirement. The requirement of schedule 3 is the minimum requirement. Which component of financial statement format is prescribed by schedule 3? Friends, what is your answer? Which component of financial statement format is prescribed by schedule 3? You remember I have discussed 5 components of the financial statement: balance sheet, profit and loss, statement of changes in equity, statement of cash flows, notes to accounts. Yeah. So which component of financial statement format is prescribed by schedule 3? Viraj is saying balance sheet and profit and loss. Abrikesh is saying balance sheet, P&L, cash flow. No. So cash flow format, you remember I have told you cash flow format is not given. Cash flow format is not given in schedule 3. Schedule 3 does not deals with the format of cash flow statement. Chandra is saying changes in equity. You're right, Chandra. So friends, balance sheet, statement of profit and loss, and statement of changes in equity. These 3 component format is prescribed by schedule 3. And balance sheet and P&L related notes and other notes are also prescribed by schedule 3, right? But if I talk about the component, yes, balance sheet format, P&L format, and your statement of changes in equity format. These 3 formats have been defined by schedule 3, right? So let me show you one of the listed company balance sheet. Please let me know if that annual report is visible. Just let me open that annual report. Just hold on, friends. I'm opening one of the annual report. Whether this annual report is visible for Hindustan Aeronautics Limited? Whether this annual report is visible? Okay. If you see the annual report of this is a large listed company, PSU, public sector undertaking. See, this is the standalone balance sheet. This is the standalone balance sheet. In the balance sheet, you can see it start with assets, right? Property, plant and equipment, capital work in progress, investment property, goodwill, other intangible asset under development, right? You can see in this particular balance sheet, the format, the balance sheet which is prepared as per this format, right? Start with non-current asset, then there are current asset, okay? Then there are financial assets, non-financial asset. This format, where this format is given, this format is given under division 2 to schedule 3. Equity and liabilities, non-current liabilities, then current liabilities. So this format is given under division 2 to schedule 3. Right. Then friends, it's standalone statement of profit and loss, revenue, expenses, right? Then your profit and loss before exceptional item, profit and loss before tax, then profit and loss after tax, right? Then other comprehensive income, where this format is given. This format is given under division 2 to schedule 3. Your earnings per share, and then you have statement of changes in equity, statement of changes in equity, and in the statement of equity, movement in share capital and movement in reserves and surplus is given, right? And this work we were doing in IGAP also, but in IGAP, it was not a separate component, right? In IGAP, it was a part of only notes to account, but in Ind AS, you can see that this entire statement of equity is signed by the board of directors and auditors also, board of directors and auditors also, right? This is signed by them as well. So friends, this statement of changes in equity, this statement of changes in equity is again one of the critical component of the financial statement, and the format is given under schedule 3, right? And the format is given under schedule 3. Then statement of cash flows. Friends, this statement of cash format is not given under schedule 3. It is not given under Ind AS 1. The guidance is given under Ind AS 7. Okay. Is that clear? And after statement of cash flow, then notes to accounts, which includes your accounting policies and the other notes. Okay. Then accounting policy starts. Clear? So friends, we discussed about the format of the component of the financial statements. Let me know if you have any question. Let me know on the chat box or the query portal. Okay. I'm happy with the participation of the students. So question number 10. Whether the item in the balance sheet needs to be bifurcated into current and non-current. Is there any guidance given in schedule 3 regarding that? Any guidance? First of all, yes, you are right, Sumit. You are right, Priyanshi. Yes, the entire balance sheet has to be bifurcated into current and non-current, right? And this is not a new thing. This was always there in IGAP also, okay? In accounting standard era also, okay? So entire balance sheet has to be bifurcated into current and non-current. Is there any guidance given in schedule 3 regarding that? Answer is yes. Schedule 3 provides the guidance on what is current and what is non-current. For example, any asset which is held for trading. In real estate companies, there is an inventory, okay? And inventory is held for sale. So it will take 3 year, 4 year, 5 year to build to construct the flats and sell those flats to the customers. But this inventory is always held for sale, always held for sale. Doesn't matter whether it will take 4 year or 5 year or 6 years. It is always kept as a current assets, right? Why? Because your schedule 3 and Ind AS 1 says that if any asset is held for sale or if any asset is held for trading, then it will be classified as a current assets. So friends, the guidance is given under Ind AS 1, and the same guidance is also replicated in division 2 to schedule 3, right? What is current, what is non-current. For example, cash and cash equivalent, cash on hand, it will always be current, right? It will always be current. Or any asset which is expected to be realized within 12 months, it is always be current. Or within operating cycle, it is always be current. So we will discuss this guidance in Ind AS 1 because this guidance in schedule 3 is taken from Ind AS 1 itself. What is the balance sheet, profit and loss, and statement of changes in equity format in schedule 3? I have shown you balance sheet, I have shown you profit and loss, and I have shown you statement of changes in equity, right? Clear, friends? I believe everything is clear so far. Okay. Question number 12. Whether any rounding of guidance is given under schedule 3? If yes, what is the provision? Friends, if you have seen the financial statement as of now, and of course, when I talk about Ind AS financial statement, okay, in Ind AS financial statement, the numbers are required to be rounded off. The numbers are required to be rounded off. Okay. Sir, what is the rounding of criteria? What is the rounding of guidance? What is the rounding of guidance? Okay. For example, if there is a company which is having a revenue of let's say 135 crores. So what is the guidance for rounding off? How do we rounding off? Okay. And Schedule 3 says that Schedule 3 has given you a guidance on the rounding off. It says that it says that you have to look at your total income. What is meant by total income? Revenue from operations plus other income is equal to total income. You have to look at your total income, right? If total income is less than 100 crore rupees, then you can round off to the nearest 100, nearest 1000, nearest lakhs or millions or decimals thereof, right? If your total income is up to 100 crore, you can round off in hundreds, thousands, lakhs, or millions. And you can keep this rounding off up to the two decimal levels. Okay. Sir, what happens if the total income is more than 100 crore? If the total income is more than 100 crore, then you can round off in the nearest lakhs, millions, crores. So when your total income is more than 100 crore, then there are three unit of rounding of lakhs, millions and crores. When it is less than 100 crore, then 100,000 lakhs or millions. 100,000 lakhs or millions. So there are four unit of rounding of 100,000 lakhs or millions. When it is more than 100 crore, lakhs, millions and crores. Okay. Sir, what is meant by rounding off? Friends, so let me explain you with the help of an example and why rounding off is important. Please confirm once my Excel file is visible. I hope my Excel file is visible now. XYZ Limited. Revenue 96 crore 55 lakh 25,357. Other income. 2 crore other income 20 crore 50 lakhs 30,200. These are the numbers. Okay. Total income. Total income is more than 100 crores. Total income is more than 100 crores. More than 100 crores. Then what is the unit of rounding of? Lakhs, millions. In 1 million, there is 10 lakh. Radhika, 1 million is equal to 10 lakh. lakhs, millions, and crores. Okay. Let's say the company has decided to present in lakhs. First of all, friends, why rounding off becomes mandatory? So, friends, you can see if I'll give you these numbers, right? Probably you will not be able to read these numbers quickly. Okay. And these are just 96 crore, 20 crore. Have you think about Reliance Industries? They have a top line of lakhs of crores, right? Lakhs of crores. They have a profit of thousands of crores. Reliance has a profit of 6,000 crores. One, two, three, four, five, six, seven. This is the this is the this is the profit of Reliance, for example. Are you able to read this number? Are you able to call out this number? If I'll give you this number, can you read this number? Right? This is an absolute number. But if I'll write rupees in crores and I'll write 36,000. Now can you read this number? In H column, now can you read this number? Rupees in crore 36,000 means 36,000 crores. Yeah. So don't think about very small companies. Sir, 2 lakh, 5 lakh, 1 crore. Probably you will be able to, just call out those numbers, read those numbers. But what happens if company like Reliance, they have a bottom line of this one, they have top line of lakhs of crores, thousands of crores. How can you read those numbers? And that is why the rounding off plays a very important aspect. Okay. So friends, how do you round off? For example, this one. If I have to round off in lakhs, just divide by 1 lakh. 1, 2, 3, 4, 5. Rupees in lakh. Rupees in lakh. Right? Same way, this is in lakh. Okay. This is total 11,706 lakhs. If you have to round off in crores, just divide by 1 crore. 1, 1, 2, 3, 4, 5, 6, 7. 96.55 crore. 20.5 crore. Right? You can put up to two decimals. In this case, you can also put these numbers maximum in two decimals. This is allowed. I hope this rounding off aspect is clear to all of you. I hope it is clear to all of you. Great. Now let's move to the next question on the universe of Schedule 3. Friends, when you read Schedule 3, you will get many nomenclature, many terminology. For example, from where the meaning of the terms given in Schedule 3 needs to be referred, like related party, control, associate, property, plant and equipment. So friends, when you read Schedule 3, you will find a lot of nomenclature, right? From where you will find the meaning. For example, you will find the meaning related party. Now, who are the related parties? What is meant by related parties? So from where you get the meaning of these items? Friends, the meaning of these items, and as rightly mentioned by Sumit, the meaning of these items has to be referred from the respective Indian accounting standard. For example, whenever there is a related party word, you have to refer Ind AS 24, which deals with related party transaction and disclosures, right? It will provide you what is meant by related party. Whenever you found the word, you found the word control, you have to refer for control, you have to refer Ind AS 110, which deals with Ind AS 110, which deals with the consolidation, which deals with the meaning of control. Okay. So this is how this the meanings, the words, the nomenclature, the terminologies which are there in Schedule 3, you need to refer respective Ind AS for those words. Okay. Right? Correct, friends? You need to refer respective Indian accounting standards. I hope it is clear. Chandra is asking, sir, Companies Act doesn't define any, sir. So Chandra, Companies Act defines some words. For example, promoters. While reading Schedule 3, you will find the word promoter shareholding. And where the promoter is defined under Section 2, subsection 69 of the Companies Act. In Schedule 3, you will find the word authorized share capital, paid up share capital. These terminologies are defined where? These are defined in Companies Act, right? But the balance sheet related line items, the P&L related line items, and these aspects which are not defined in Schedule 3, which are not defined in Companies Act, where you will refer. Schedule 3 says that you have to refer respective Indian accounting standard to understand the meaning of these terminologies, right? Clear? Okay. Yes. So let's move to the next one. Question number 14. Whether any materiality threshold is defined in Schedule 3. Whether any threshold for materiality is defined in Schedule 3. Yes or no? Friends, question number 15 gives the answer of question number 14. Right? Question number 15 gives the answer of question number 14. So if you read question number 15, it says that any item of income or expenditure which exceeds 1% of the revenue from operations or rupees 10 lakh, whichever is higher, need to be disclosed. Right? So friends, Schedule 3 says that, for example, the turnover of the company, the revenue from operation of the company is 10 crore. Okay. Now, what is 1% of 10 crore? What is 1% of 10 crore? So 10% of 10 crore is 1 crore. Right? And what is 1% of 10 crore? 1% of 10 crore is 10 lakh. 10 lakhs. So friends, the revenue from operation of a company is 10 crore. 1% comes as a 10 lakh, and let's keep it as a 15 crore. Okay. Because the other threshold is also 10 lakh. The revenue from operation of a company is 15 crore. Then what is the 1% of 15 crore? It comes out at 15 lakhs. 15 lakh. Schedule 3 says that any item of income or expenditure, which exceeds 1% of the revenue from operation, means which exceeds, in my example, 15 lakh rupees or 10 lakh rupee, whichever is higher. First of all, what is higher, 10 lakh or 15 lakh? Of course, 15 lakh is higher. 15 lakh is higher. So if any income or any expenses which is more than 15 lakh, it has to be disclosed separately in the notes to accounts. For example, the company has spent 15 lakh rupees. The company has spent 15 lakh rupees in printing and stationery. The company has spent 15 lakh rupees in printing and stationery. Whether this printing and stationery is required to be disclosed or not. Yeah, to be disclosed. Yes. So the company has spent 20 lakh rupees on traveling or conveyance. Whether it is required to be disclosed as a separate line item in the notes to accounts under other expenses? Answer is yes. But what happens, Sumit, Viraj, Bindu, Brinda? For example, if the company would have spent only 12 lakh rupees in printing and stationery, or let's say 10 lakh rupees in traveling and conveyance, then it is not required to be separately disclosed as a separate line item. It is not a material item with respect to Schedule 3. Right? Clear? Is that clear? Okay. Yes, materiality threshold is defined under Schedule 3, and Schedule 3 says that any item, it says that any item which is 1% of the revenue from operations or 10 lakh rupees, which is more than higher of these two thresholds, right? Then it is considered as a material. So materiality threshold is given under Schedule 3. Right, friends? Is that clear? Question number 15. Question number 15 says that whether this requirement belongs to Ind AS or Schedule 3. This requirement belongs to Ind AS. This requirement is not related to Schedule 3. This requirement belongs to Schedule 3. Okay, it does not belongs to Ind AS. Friends, question number 16. Is there any aging related disclosures given in Schedule 3? Is there any aging related disclosure given in Schedule 3? Yes. You remember I told you on 24th March 2021, major amendments came in Schedule 3 space. So you are required to now, effective from financial year 21-22, you are required to provide the aging of capital work in progress, aging of intangible asset under development, aging of trade receivables, aging of trade payables. You are required to provide the aging of these four items in your notes to accounts. Okay. Capital work in progress, intangible asset under development, trade receivable, trade payable. You are required to provide the aging of these four items. Question number 17. What were the major amendments in Schedule 3 in accordance with the last amendment? The last amendment happened on 24th March 2021. And according to the last amendment, this aging was never required prior to 24 March 2021, right? This aging was the amended requirement of this amendment, right? Earlier, this requirement was not there. Another example of this major amendment is promoter shareholding. So friends, earlier, the major shareholding was only required. For example, if any shareholder who is holding more than 5%, who is holding more than 5%, right? More than 5% of shareholding is required to be disclosed. But now, in addition to more than 5% shareholding, you are also required to disclose the promoter shareholding. Another one, if a company has a immovable property, okay, but the title deed is not there in the name of the company. Example, for example, Tata Steel Limited, right? When you look at Tata Steel Limited annual report, you will find Tata Steel Limited has acquired a company, Bhutan Steel Limited, right? Tata Steel has acquired Bhutan Steel Limited. So it was a merger, it was an acquisition. So whatever land belongs to Steel Limited, it was in the name of Bhushan Steel Limited only. It does not come into the name of Tata Steel Limited. So when you see the disclosure in the annual report of Tata Steel Limited, you will find they disclose this fact that these are my land and building. These are not in my name. Why? Because these properties belongs to Bhushan Steel Limited. We have acquired Bhushan Steel Limited 2 years ago, and the name change is in the process, right? So these kind of disclosures are required as per Division 2 to Schedule 3, right? These were the major amendments in Schedule 3. Is that clear? Is that clear? Do you have any question, friends? Do you have any question? Period also considered as aging? Yes, Sumit. So if I talk about aging, it means, for example, you have to give trade receivable aging. So you have to provide, as on balance sheet date is, let's say 31st March, 31st March 2024. Okay. So you have to provide my debtors up to 6 months. Okay. The debtors which are 6 months old, then 6 months to 1 year, then 1 to 2 year, 2 to 3 year, and more than 3 year. This is kind of aging which is required to be disclosed for debtors, trade receivables, right? So this is nothing, it's a period. Okay. Any question, friends, other than this? Bindu is asking, sir, is the threshold limit 10 lakh for Schedule 3? Bindu, it is 10 lakh or 1% of revenue, whichever is higher. For example, Bindu, the turnover of the company is, let's say, the turnover of the company is 1 crore, right? Then what is the 1% of 1 crore? It is 1 lakh. So 1 lakh or 10 lakh, whichever is higher. So in this case, 10 lakh would be higher, right? So the materiality threshold is, friends, 10 lakh or 1% of revenue, whichever is higher. Any further question, friends? I have completed the introduction of Division 2 to Schedule 3. And I'll wait for another 1 minute. If you have any question, I would be happy to answer, because I have already covered all the questions on the Zoom chat box and on this query portal of Board of Studies of ICAI. I can see no any question is left to be answered. Let's move to the next agenda of the day, which is Ind AS 1, presentation of financial statement. So friends, now we have enough understanding that there are three divisions of Schedule 3, right? Now we understand that Division 2 to Schedule 3 is applicable to Ind AS compliant companies. Now we have understood that there are five components of the financial statement: balance sheet, profit and loss, statement of changes in equity, notes to statement of cash flows, and notes to accounts. We understood that the balance sheet, profit and loss, and statement of changes in equity format is given under it is given under Schedule 3, right? And we also understood that in some way or other, your Indian accounting standard 1 also deals with the presentation of financial statement, and it also provides the guidance on the balance sheet, profit and loss, statement of changes in equity, and notes to accounts, right? With this, let's start the journey of the first standard of this batch, which is Indian Accounting Standard 1, Okay. And as the name suggests, this standard captures the presentation of financial statement, right? And whenever I say financial statement, it includes your balance sheet, profit and loss. It includes your statement of changes in equity. It includes no statement of cash flows and notes to accounts, right? As far as the agenda of this standard is concerned, we are going to discuss the objective of this standard and the scope of this standard. We are going to discuss the purpose of the financial statement, right? That what are the purpose of the financial statement, why financial statements are going to be prepared. We are going to discuss the component of the financial statement, that what are the components of the financial statement, what constitutes a complete set of financial statements, right? Then we are going to discuss definitions, two definitions which is given in Ind AS 1. Overall consideration, friends, we will also discuss what are the key features of the financial statement. What are the key features of the financial statement? When I say key features, for example, do you remember the fundamental accounting assumption? Do you remember fundamental accounting assumptions? Any students who remember this fundamental accounting assumption? going concern, consistency, accrual. Have you heard these words? सुना सुना लग रहा है, सुना सुना लग रहा है. Is it something which is heard or is it something which is blank? Yes, we have heard that. So likewise, friends, Ind AS 1 also defines what should be the key features of the financial statement, what are the overall considerations which you need to consider while preparing your financial statement. For example, going concern. For example, concept of accrual. For example, concept of consistency, right? So these are the consideration which one has to consider while preparing the financial statements. Then, friends, we are going to discuss the structure and content, that what should be the structure of the component of the financial statement and what should be the content in the balance sheet, in the profit and loss, in the statement of changes in equity, in the notes to accounts. Of course, this statement only touches statement of cash flow, but this standard does not talks any guidance on the statement of cash flows, because Ind AS 1 directly refers Ind AS 7, which is a separate standard on statement of cash flows. I hope the context is clear to everyone. These are the agenda, these are the item which we are going to discuss in Indian Accounting Standard 1, presentation of the financial statements. Objective of Ind AS 1. This Ind AS, friends, this Ind AS prescribe. Just give me a minute. Yes. This Ind AS 1 prescribe the basis. Prescribe the basis of what? Basis for presentation of general purpose financial statement. Friends, Ind AS 1 only prescribe the basis of presentation of general purpose financial statement. Now, what is meant by general purpose financial statement? And I'll give you one example to understand this. Mr. Mukesh Ambani has asked his CFO that, Mr. CFO, I need a balance sheet where the balance sheet should start with trade receivables, right? And you have to give me the trade receivable as a first line item, and these receivables or these debtors you have to classify into domestic debtor and you have to classify into overseas debtors. Then you need to give the balance of property, plant and equipment, and I want you to provide the fair value of the property, plant and equipment in the balance sheet. So Mr. Ambani is providing the guidance that I need the balance sheet in this particular manner, right? So my first question to you, whether that CFO will provide that balance sheet to Mr. Ambani. Whether that CFO will provide such balance sheet to Mr. Ambani. Yes or no? Yes. So Chandra is saying yes only for Ambani, not for regulators. Very good, Chandra. Same way, and you all are right, because the CFO does not have any option to not to provide. Let's say I am the shareholder of Reliance. Bindu is the shareholder of Reliance. Sumit is shareholder of Reliance. Chandra is shareholder of Reliance. We all are shareholders of Reliance. And we are also asking such balance sheet from Reliance, from the CFO. Whether CFO is obligated to provide us such balance sheet, which he is giving to Mr. Ambani. Of course, no. Of course not. Right? Of course not. Why? Because the balance sheet which the CFO is providing to Mr. Ambani, it is only for internal consumption. It is only for internal consumption, right? It is only for the limited purpose. It is only for some MIS, for taking some decisions. It means that kind of a balance sheet is not a general purpose balance sheet, but whatever we all are asking, that is called as a general purpose balance sheet, which is required to be prepared in accordance with the format given under Schedule 3 of Companies Act, and which is required to be prepared as per Indian Accounting Standard 1 and the other laws and regulations, right? Means whatever we are getting, it is already defined, it is already destined, it is given by the regulators, right? And these financial statements are known as a general purpose financial statement. The financial statement which Mr. Ambani is getting from his CFO is could be special purpose financial statement. It could be MIS based financial statement, tailor made financial statement, right? Or internal consumption financial statement. I hope you have understood the meaning of general purpose financial statement. Second, to ensure comparability with entity's own financial statement of previous period or with financial statement of other entities. If you see the balance sheet of Bharti Airtel, the first line starts with the property, plant and equipment. If you see the balance sheet of Reliance Industries Limited or Reliance Jio Limited, the first line starts with the property, plant and equipment. If you see the balance sheet of Nestle and ITC, the first line starts with the property, plant and equipment. Why? These companies are different companies located in a different part of India, right? So the employees are different. The persons who are preparing financial statements are different. How come everyone has a first line item as a property, plant and equipment? Because of the rule, given under Schedule 3, because they are following Ind AS 1, they are following Schedule 3. That is why. So friends, it's more because of consistency, right? So the objective of Ind AS 1 is to provide a rule-based guidance to everyone so that the financial statement of one entity can be compared with the other entity, and the financial statement of one entity can be compared with the previous period of that entity also, right? For example, the standard talks about consistency, consistency in application of accounting policies, consistency in presentation. This standard talks about these aspects, right? Third, this standard sets overall requirement for the presentation of the financial statement, guideline for their structure, and minimum requirement for their content. So this standard also provides the requirement for presentation, the guideline for structure, and minimum requirement for their content. Friends, this is the objective of Ind AS 1. Whenever you read any Indian accounting standard, whenever you learn any Indian accounting standard, every Ind AS starts with the objective. Why? Why this standard is issued? Then comes under scope, that where this standard is applicable. Then comes as a definition. What are the critical definition of the standard? Then initial recognition, initial measurement, subsequent recognition, subsequent measurement, presentation, disclosure. So this is kind of a structure which every standard have, right? In case of disclosure related standard, of course, recognition and measurement will not be there, right, friends? So friends, let's move to the next slide. Next slide talks about the scope, where the standard is applicable. Objective is why this standard is issued. Scope is where this standard is applicable. First of all, this standard is only applicable in general purpose financial statement. This standard is only applicable in the preparation of general purpose financial statement, not on the special purpose or tailor-made financial statement, right? The financial statement which has been asked by Mr. Ambani, on that financial statement, Ind AS 1 is not applicable. Ind AS 1 is only applicable on the general purpose financial statement. Okay, friends? Yes. Other Ind AS sets out. What other Ind AS says? Other Ind AS sets out the recognition, measurement, and disclosure requirement for specific transaction and events. Friends, this standard only talks about the presentation of general purpose financial statement, only presentation. But who talks about the recognition and measurement of PP? Who talks about the recognition and measurement of intangible assets? Who talks about the recognition and measurement of deferred taxes? Who talks about the recognition and measurement of government grants? Yeah. Or who talks about the disclosure requirement of related party disclosures? Who talks about the disclosure requirement of reporting segments? Specific Ind AS, respective Ind AS. Okay. So this Ind AS talks about the overall requirement relating to presentation, but the respective Ind AS, specific Ind AS, talks about the recognition, measurement, and disclosure requirement for the specific item, specific transaction, and specific events. Right? Ind AS 16, it only talks about fixed assets. It only talks about property, plant, and equipment. Ind AS 38, it only talks about intangible asset. Ind AS 36, it only talks about impairment of assets. Friends, in case of listed companies, you have heard that listed companies are publishing their results on a quarterly basis, right, to the stock exchanges. And listed companies are also preparing their financial statement on a quarterly basis, interim financial statement. We call it as an interim financial statement, right? If you go to the website of Infosys Limited, you will find on the investor relations section, you will find that Infosys Limited has prepared their financial statement on a quarterly basis. Why? Because it's a listed company and they call it as a condensed financial statement, right? So Ind AS 1 says that I am not applicable as far as structure and content of condensed interim financial statement is concerned, except for general features of financial statement, right? So friends, Ind AS 1 is not applicable when the company is preparing interim condensed financial statement, right? As far as structure and content is concerned. But as far as general features are concerned, yes, Ind AS 1 is applicable to the general features as well. For example, what could be the general features? Doesn't matter, you are preparing interim financial statement or annual financial statement, doesn't matter. You have to prepare your financial statement on a going concern basis until and unless your going concern is defeated. You have to prepare your financial statement on accrual basis. You have to apply your accounting policies consistently. You have to apply the rule of materiality, right? You have to give the statement of compliance. So friends, this is the requirement of Ind AS 1, right? Then Ind AS 1 says that I am applicable to all entities. All entities means corporate entities. I am applicable to standalone as well as consolidated financial statement. This standard says that I am applicable to standalone as well as console. So friend, this is the diameter, this is the radius of Ind AS 1. If you have any question on this, I would be happy to answer. Any question on this? Any question, friend? No. Okay. Yes. General purpose financial statement we have discussed. General purpose financial statement are those financial statements which are intended to meet those financial statements which are intended to meet the need of users who are not in a position to require an entity to prepare reports tailored to their particular information needs. For example, I cannot compel the CFO of Reliance that please provide me the balance sheet P&L according to my needs. And that is why, to protect the interest of the investors, regulators, and the other stakeholders, government has given the rules. The government has notified Indian Accounting Standard. Government has notified Schedule 3, Division 2 to Schedule 3. Government has given Companies Act. Government has given
Securities and Exchange Board of India Act, LODR regulations. So government has given this, and government told companies, please prepare the financial statement according to these rules and submit it to us and make it public also, right? Ind AS. What is meant by Ind AS? Indian accounting standards are the converged version of IFRS applicable to India. Friends, these Ind AS are notified under Section 133 of Companies Act 2013. Friends, first of all, I want to make it very clear that whenever you are talking about Indian accounting standards, so these Indian accounting standards are notified under Section 133, right? In Section 133, your Ind AS is notified, as well as under the same Section 133, accounting standards are also notified, right? So if you open Section 133 and you will find accounting standard, don't get surprised. Indian accounting standard and our old accounting standard both are notified in Section 133 of the Companies Act 2013. The rules are different, but the section is same. Clear? Is it clear or clear? Clear in mind or clear from mind? Clear in mind? Clear in mind or clear from mind? Friends, I'm not receiving any query on the query portal. Are you guys accessing the query portal also? That Board of Studies query link? Because in the last half an hour or so, I haven't received any query on the query portal. Sir, Ind AS is applicable from February 2015. How it is present in Companies Act 2013? Indra is asking, sir, Companies Act came in 2013. Ind AS were notified in 2015. So Chandra, the act is 2013, but this act keeps on getting amended. Chandra, what is Income Tax Act? What is the year of Income Tax Act? Income Tax Act 1961, right? Chandra, do you remember that old scheme, new scheme? And are you aware every year your Income Tax Act got amended? So the amendment came in Finance Act, right? Likewise, the amendment came in Companies Act rules. These Ind AS were notified in Companies Ind AS rules 2015. The year of the act is the date of birth of that act, the birth of that act. Until and unless the complete act is scrapped and the new act comes. For example, earlier the Companies Act 1956 was there. The entire act was scrapped and Companies Act 2013 was introduced. Okay. So it keeps on getting amended. There is a change in the rules. Like for Income Tax Act, there is a change in Finance Act. Then friends, there is a concept of materiality. There is a concept of materiality. Bindu is asking a question, sir, does that mean that both Ind AS that applies to companies and AS that applies to non-companies are notified through Section 133? No, Bindu. Bindu, if you remember, I don't know you have attended the first lecture or not. When I was discussing the overview of Ind AS and roadmap for applicability of Ind AS, I had also discussed what are the various set of standards, what are the various accounting standard framework in India. Then at that point of time, I have discussed Indian accounting standards are applicable to companies. Accounting standards are applicable to some companies, right? And Ind AS and AS, these both are notified by Ministry of Corporate Affairs because on companies, Companies Act is applicable. But what about non-corporate entities? What about non-companies? Friends, on non-companies, this accounting standard notified by Companies Act is not applicable. Accounting standard issued by ICAI are applicable, right? So Bindu, we have three set of accounting standard. Number one, Indian accounting standard notified by Companies Act. Accounting standard notified by Companies Act, and accounting standard which are issued by ICAI for the non-corporate entities, right? Typically and largely, accounting standard notified by the Companies Act and accounting standard notified by ICAI or issued by ICAI are largely same, barring on few entities, few non-corporate entities, some exemption and relaxations are given by the accounting standard issued by ICAI. Is that clear, Bindu? But to answer your question straightforward, accounting standard notified by Companies Act are not applicable to non-corporate entities. Okay, guys. Now let's discuss the materiality, concept of materiality. What is the concept of materiality? Friends, there is no any materiality threshold which is given. There is no any materiality threshold which is given under Ind AS. Okay. Ind AS provides a subjective threshold for materiality. Sir, what is meant by subjective threshold? Ind AS says that every that item will be material. Every that item will be considered as material, where the omission of that item or the misstatement of that item or obscuring of that item will impact the decision making capacity of the user of the financial statement. I'll explain this with the help of an example. There is an investor, and that investor wants to invest 100 crore rupees in a textile company. There is a company A and company B. So there is a textile company A and textile company B. Both these companies are similar in terms of their operations, similar in terms of their net worth, similar in terms of their balance sheet size. So everything is similar in terms of returns, net profit. So these are identical companies. Now this investor is indifferent and he is not able to take a decision whether he should go for investing 100 crores in company A or company B. Now I am giving you more facts. Company A does not have any contingent liability. Company A does not have any contingent liability. Company B have contingent liability, but company B has not disclosed any contingent liability. कंपनी बी के पास कॉन्टिजेंट लाइबिलिटी है बट डिस्क्लोज नहीं किया. सो इन अ वे there is no any contingent liability in company A notes and in company B notes to accounts. Friends, had the company B would have disclosed the contingent liability, will it help in taking a decision to this investor? Let's say a court case is going on or a major litigation is going on. Will it help that investor in taking a decision? Answer is yes. Yes. Because if some litigations are going on, so this investor will foresee some risk in company B. Either he will ask for more shareholding into the same amount he is putting as an investment, or probably he will go for company A. So friends, avoiding the information relating to contingent liability, right, is impacting the decision making capacity of the user of the financial statement, and hence this is considered as a material. This is considered as a material, right? So friends, the subjective definition of materiality is given. The objective definition of materiality is not given in the standard, right? Now let's move to the purpose of the financial statement. What is the purpose of the financial statement? Sriya is asking, sir, the amendment for Schedule 3 are applicable from which financial year, and is there any retrospective impact? Sriya, the amendment, these major amendment in Schedule 3 was notified on 24th March 2021. It was applicable from financial year 21-22, and of course comparatives are also required to be presented for the financial year 2021. So the retrospective impact is only with respect to the comparative of 1 year. That's all. Now, what are the purpose of the financial statement, right? We understood the objective, we understood the scope, we understood some definitions. Now, friends, this standard talks about presentation of financial statement. Now, what are the purpose of the financial statement? What are the purpose? Friends, financial statement provides you structured presentation. Structured presentation of what? Structured presentation of financial position. Of financial position, right? Structured presentation of financial position, or structured presentation of financial performance. Who gives you the financial position? Balance sheet. If you see the balance sheet, it gives you the balance sheet as it gives you the financial position of the company. What is the solvency position? What is the liquidity position, right? Whether the company, what are the size of the balance sheet of the company? What are the asset size? What is the liability size? Okay. Financial performance. Who gives you the financial performance? Statement of profit and loss. Statement of profit and loss. Statement of changes in equity. These provide you the financial performance of the entity, right? The financial statement also provides you the liquidity position, the cash flow position of the entity, right? For example, friends, there is a company, and the company has a 50,000 crores of revenue. Entire revenue is on credit basis for 1 year, and the company has 30,000 crore of expenses. Entire expenses are on a cash basis. Means the company is paying for all the expenses, the company is paying upfront. Friends, if you see the balance sheet, you will find a very sound balance sheet. 30,000 or 50,000 crore lies in the debtors. If you found the P&L, you will found a very healthy P&L. 50,000 crore revenue, 30,000 crore expenses, 20,000 crore bottom line profit. But friend, you will be able to know the reality when you will move into the cash flow statement. You will find the cash flow from operation is negative. Am I right? You all are CA final student. You understand this thing, right? Why this cash flow from operations are negative? Because पैसा तो आया नहीं ना. The entire sale is credit, and the entire expenses are on cash basis or on a real time basis. So the company is not able to generate cash from the operations, right? And hence to meet the operational requirement, the company is taking a borrowing. So friends, probably the company is required to take borrowing to run its operations. So the cash flow from operation is negative, but the cash flow from financing activity is positive because the company has taken a loan or borrowing, right, to meet its operation, or the company has raised equity, right? So friends, these financial statement provides you the structured presentation of financial position, financial performance, and cash flows. Balance sheet gives you financial position. Statement of profit and loss, statement of changes in equity gives you financial performance, and statement of cash flow gives you liquidity performance or cash performance, right? These are the purpose of the financial statements. These are the purpose of the financial statements, right? Friends, it's 8:26 now. Let's have a 10 minutes break, and we will start at exactly 8:37. Okay. Is that fine? Let's have a 10 minutes break. Ajit ji, Ashok.
I hope my voice is audible and my screen is also visible. Yeah, so students, before break, we were discussing purpose of financial statements. Just allow me a minute.
Now we are going to discuss one of the most important part of components or complete set of financial statement. Students, what are the element of the financial statement? If I ask someone what are the element of the financial statement, balance sheet, P&L, Shriya is saying, Viraj is saying asset, liability, equity. Okay. So I have asked what are the element. I haven't asked that what are the component of the financial statement. I've asked what are the element of the financial statement. So if I talk about element, there are
Financial
five
position.
elements. Panch Tattva. There are three elements to the balance sheet and two elements to the P&L. Right. Asset, liability, equity, income, and expense. Asset, liability, equity, three of the balance sheet and two of the P&L. So whatever commercial item you will name, you have paid a salary, you have deposited cash into the bank. So every item will get covered in these five elements: asset, liability, equity, income, and expenditure. Right? There are five elements, Viraj. So now we are discussing components or complete set of financial statement. What are the component of the financial statement? Sriya, whatever you are telling, balance sheet, P&L, these are the component of the financial statement. Balance sheet is the component of the financial statement. Statement of profit and loss is the component of the financial statement. Statement of changes in equity is one of the component of the financial statement. Cash flow statement, again, it's a component of the financial statement. Notes to account, including accounting policies and explanatory notes, right? And of course, in the financial statement, you are required to provide at least 1 year comparatives. You are required to provide at least 1 year comparatives, right? So friends, this balance sheet, if I talk about balance sheet, so I have shown you the balance sheet format. In IGAP, the balance sheet starts with your equity, then non-current liability, then current liability, then non-current asset and current asset. But in Ind AS, the balance sheet format is it starts with non-current assets, then current asset, then equity, then non-current liability, then current liability. So the presentation, the format is just reverse in comparison to IGAP because this is the international format. And these Ind AS are the converged version of IFRS. Likewise, we have also adopted international presentation of balance sheets, right? I'll discuss more in detail about the balance sheet items, about the current, about the non-current. I'll discuss more in detail. Now, the second one is statement of profit and loss. What is statement of profit and loss? Statement of profit and loss is which is including other comprehensive income, including OCI, right? So there is a one new concept in Ind AS P&L, in Ind AS statement of profit and loss, and that concept is other comprehensive income, which again we are going to discuss when we'll discuss one by one structure and content of the financial statement, component of the financial statement. Then there is a statement of changes in equity. Statement of changes in equity. Statement of changes in equity is nothing. It's a movement in the equity share capital and reserves and surplus, right? So you are giving opening equity share capital, then shares issued during the year, then buyback during the year, then closing equity, right? Likewise, you are also providing opening retained earning, add profit during the year, less dividend paid during the year, closing, right? This is what you are providing. Okay. Cash flow statement. Cash flow statement. You're also providing statement of cash flows, right? Current year, comparative year, and this is the same cash flow which we are preparing since ages. Then there is a notes to accounts, and in the notes to accounts, there are the accounting policies. You are providing the summary of significant accounting policies. You are also giving the explanatory notes. right? Explanatory notes means you are providing that balance sheet breakups, P&L breakups, then your qualitative disclosures, related party disclosure, segment reporting, actuarial disclosure, lot of stuff, contingent liability, capital commitment. You are providing all these sort of disclosures in terms of explanatory notes. And in the every financial statement, you are providing a comparative information. Right? You are providing a comparative information at least for 1 year. These are the component of the financial statement. Now, friends, we are going to discuss a big change in Ind AS 1 in terms of financial statement in comparison to accounting standard. Big change. What is that big change? Friends, we always heard about only, what we have heard about? We have heard about two column balance sheet, right? We have seen two column balance sheet, na? Balance sheet for current year, balance sheet for previous year. This is what we have seen. We have seen 1 year comparative only. Yes or no? Yes or no? So we have always seen two column balance sheet, current year balance sheet and comparative year balance sheet. Balance sheet as at 31st March 24, balance sheet as at 31st March 23. This is what we have always seen. Friends, in Ind AS 1, in the component of financial statement, it also talks about a balance sheet as at beginning of the earliest comparative period. And I call it as a third balance sheet. सर इंड एस में तीसरी बैलेंस शीट भी आती है यस अ बैलेंस शीट एज एट द बिगिनिंग of the earliest comparative period. Friends, for example, you are preparing financial statement for financial year 23-24. Financial year 23-24. What is your reporting date? 31st March 24. What is your balance sheet date? 31st March 24. What is your comparative balance sheet? What is your comparative balance sheet date? It is 31st March 2023, right? 31st March 2023. What is your comparative period? बैलेंस शीट डेट तो 31st March 23 है, बट कंपैरेटिव पीरियड क्या है? जैसे करंट पीरियड 23-24 है. व्हाट इज कंपैरेटिव पीरियड? 22-23. व्हाट इज द ओपनिंग डेट? व्हाट इज द ओपनिंग ऑफ द कंपैरेटिव पीरियड? व्हाट इज द ओपनिंग डेट ऑफ द कंपैरेटिव पीरियड? 1st April 2022. You're right. 1st April 2022. Then sir, it means you are required to prepare 31st March 24 balance sheet. You are required to prepare 31st March 23 balance sheet. And you are also required to prepare 1st April 2022 balance sheet. Answer is yes. Third balance sheet. What is the third balance sheet? Third balance sheet is opening of the comparative period balance sheet. Opening date of the comparative period balance sheet is the third balance sheet. Opening date of the comparative period balance sheet, right? Opening date of the comparative period balance sheet is the third balance sheet. So a balance sheet as at the beginning of the earliest comparative period, when in three situations: in case of change in accounting policy, in case of correction of error, and in case of major reclassification, right? Friends, a company is required to prepare and present third balance sheet. What is the third balance sheet? Opening of the comparative period balance sheet, right? Opening of the comparative period balance sheet. In case of three items, in case of three changes: number one, whenever there is a change in accounting policy; number two, whenever there is a correction of prior period errors; number three, whenever there is a change, there is a major reclassifications, right? In these three cases, the company is required to give the third balance sheet. And what is the third balance sheet? It is the opening date of the comparative period balance sheet. Balance sheet is always as on date, right? Sounds good? Sounds good? Okay. Now, friends, we will discuss, sir, what's the purpose of previous year balance sheet? Why it is not given attachment? Shreya, I have not understood your question, but you will be able to understand. Let me complete first. So I am giving you I'll show you the practical example. I am explaining this concept first. Probably your question will be answered automatically. So let me take you to the Excel file and please confirm once the Excel file is visible. I hope the Excel file is visible now. Is it visible? Study on third balance sheet, right? As I told you, the company is required to give the third balance sheet whenever there is a correction of prior period error, whenever there is a change in accounting policy and major reclassification. So I'll discuss the concept which is related to correction of error, right? A Limited purchased a machinery for rupees 1 lakh on 1st April 2016, having a useful life of 10 years. So what is the cost of machine? 1 lakh rupees. What is the date of purchase? 1st April 2016. And what is the useful life? Useful life is 10 years. The accountant has wrongly passed an entry for rupees 10,000 instead of rupees 1 lakh. The accountant was required to pass an accounting entry, machinery account debit to cash account by rupees 1 lakh, but he has passed the same accounting entry by rupees 10,000. So machine was understated, cash was overstated, and balance sheet got tallied because this is a compensating error, right? This error was found while auditing the financial statement of A Limited for FY 2021. Sriya was the auditor of this company, right? So when Sriya was auditing the financial statement of this company for FY 2021, she got this error. She found this error, right? So this error was found while auditing the financial statement of A Limited for FY 2021. Sounds good? Suggest the correct accounting treatment in light of Ind AS 1 and in light of Ind AS 8. Sir, you are teaching Ind AS 1, then why you are asking the accounting treatment in light of Ind AS 8 also? Friends, Ind AS 8 also talks about the same thing. It says that whenever there is a correction of prior period error and whenever there is a change in accounting policy, you have to give the third balance sheet. Okay, you have to give the third balance sheet and you have to take the impact of correction or change accordingly, right? So I hope the question is clear to everyone. I hope the question is clear to everyone. Anyone to whom the question is not clear? It is clear? Okay. Now, friends, this machine was purchased on 1st April 2016. The life was 10 years. And the machine was wrongly recorded at 10,000. So what was the depreciation which was wrongly recorded at that point of time? In 1617, the depreciation was charged for on 10,000 on 10,000, which was a cost wrongly recorded. Divide by 10, right? 1,000 depreciation was recorded in 1617, in 1718, in 1819, and in 1920. 2021 is the current year. Shreya has found this error, right? But for the last 4 year financial statement has already been filed with the MCA or SEBI, whatever. Is that clear? 1,000 rupee was charged in the last 4 years. What should be the correct amount which would have been charged? What should be the correct amount which would have been charged as far as depreciation is concerned? 1 lakh divided by 10. 1 lakh divided by 10. 10,000 was required to be charged. Every year 10,000. So how much depreciation has been charged? If I talk about this minus this, so 9,000 depreciation has been short charged in the P&L, right? 9,000 depreciation have been short charged in the P&L. Friends, what is my current year? Friends, what is my current year? My current year is 31st March 21. My current balance sheet is 31st March 21. Current year is 2021. What is my previous year? It is 1920 is my previous year. 2019-20 is my previous year. So my current balance sheet date is 31st March 21. My previous balance sheet date is 31st March 20. And what is my third balance sheet date? What is my opening date of the comparative period? Sumit, what is my comparative date? What is my opening date of the comparative period? 1st April 2019. You're right, Sriya. 1st April 2019. So it means I have to, of course, I have to present the balance sheet of current year. I have to correct the balance sheet of previous year also as a part of comparative. Not, I am not required to refile the last year financial statement. I just need to correct my comparative balance sheet in the current year. मतलब मेरे जो comparative number होंगे, I have to restate my comparative number. I have to restate my comparative number. Right? That's fine. Yeah. Okay. So that is why I'll use the word restated. And friends, I have to correct my opening balance of the comparative also. You know, balance sheet numbers are carried forward and brought forward. Balance sheet numbers are carried down and brought forward. पता है ना आपको, बैलेंस शीट नंबर तो आगे जाते हैं और फिर आप पिकअप करते हो अगले साल में पुराने नंबर्स को. If the company has purchased a land in 1960, this land will always come into the balance sheet until and unless this land has been sold out. Right? So friends, if you need to correct the comparative, in the comparative your cash is wrong, your property, plant and equipment, machinery balance is wrong. If you need to correct the comparative, you need to correct the opening balance of the comparative also. And what is the opening date? 1st April 2019. And what are the periods prior to 1st April 2019? There are 3 periods prior to 1st April 2019. 16, 17, 17, 18 and 18, 19 years. And how much wrong depreciation have been charged in the last 3 years? 27,000 rupees of wrong depreciation have been charged in the last 3 years. Right? Right? And now, whatever action was required to be taken, the date of error till the opening date of the comparative, we will take the cumulative impact and we will correct our 1st April 2019 balance sheet numbers. Then we will correct our comparative number, and of course, current year is going to be published. Now, let's discuss further and let me make you guys understand about this. What was my balance of machinery as on 31st March 2019 if the entire correction would have been correct? 1 lakh is my cost. My accumulated depreciation for 3 years would be 70,000. Right? अगर सब कुछ ठीक चल रहा होता तो as on 31st March 2019, what would have been gross block and what would have been net block? So net block would have been 70,000, right? And my cash would also have been credited by 1 lakh rupees, right? If everything was right, what was happened? Machine account should be debited by 1 lakh rupees. Cash account should be credited by 1 lakh rupees. Depreciation has to be debited every year by 10,000 rupees. And retained earning, it will flow to the retained earning as a negative retained earning by 10,000 rupees. But what happened? Your existing gross block is 3,000. Accumulated depreciation for last 3 years is 3,000 only on the basis of 10,000. And what is your wrong net block on the opening of date of the comparative period? As on 31st March 2019, it is 7,000 rupees. You should have lended on 70,000, but you have lended on 7,000. How much your net block? What is the amount which is wrong in your net block. Your net block of the PP is 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 understated by 63,000, right? अगर सब कुछ ठीक होता तो 70,000 होता. Since nothing is right, it is 7,000. So you need to debit your PP on the opening date of the comparative on 1st April 2019. You need to debit your PP by 63,000, right? You need to debit your PP by 63,000. Any doubt here? Any doubt? Any doubt? Yes. Friends, what is the amount of correction which you need to pass in your cash account? Your cash account was credited by 10,000. Now you need to correct this. So what is the amount by which you need to correct your cash account? 90,000. Your cash was understated by, cash was overstated by 90,000. Credit cash 90,000. From how much amount your retained earning would have been debited? Tell me. Since you have less charge or depreciation, your retained earning should have been debited by how much amount for the last 3 years? 27,000, 9,000 depreciation 1 year short. For 3 year it should be 27,000. Or if you will take the balancing figure 90 minus 63, it will come out as a 27,000. Why cash account has been credited by 90,000? Yeah, if you can see, the machine was purchased for 1 lakh rupees, but it was only booked for 10,000 rupees. So what was the accounting entry which would have been passed? Machine account debit to cash account by 10,000. Although what should have been the correct entry? Machine account debit to cash account by 1 lakh rupees. It means cash was only credited by 10,000 at that point of time. It means in the cash account, the balance is overstated by 90,000. So now you need to correct. When you are presenting the third balance sheet, opening of the comparative period balance sheet, you need to correct your balances ना. आपका cash 90 से ज्यादा है. So you need to credit your cash by 90,000, right? You need to credit your cash by 90,000 and you need to debit your PP by 63,000. Why? Because अगर सब कुछ ठीक होता तो PP would have been depreciated by higher amount also ना, right? And the difference between 90 and 63 is 27,000. If you want to, if you want to take this 27,000, this is nothing. It's a 3 year impact up to 31st March 2019 impact of depreciation shortfall earlier. Anyone who is not clear on this accounting entry, please let me know. Anyone who is not clear on this accounting entry. So, so what is this 1st April 2019 balance sheet? This 1st April 2019 balance sheet is correct balance sheet of 31st March 2019. So whatever 31st March 2019 numbers are there, we will correct this numbers on 1st April 2019. What we will do? We will plus 63,000 in the PPE. We will minus 90,000 in cash. What is the impact on my asset side of the balance sheet? Negative 27,000. I will also debit my retained earning by 27,000. My opening corrected balance sheet got tallied. Any problem so far? Any problem? Any issue? Any difficulty in understanding that how I have, how I have given this impact? Any problem? Is that okay? Viraj is saying clear. Abrikesh is saying clear. Priyansi is okay. Radhika is okay. Sir, how correct retained earning is now shown? So correct retained earning is shown here, na? I will debit my retained earning by 27,000. For example, earlier the retained earning was 5 lakh. So now it has to be shown as a 4 lakh 73,000, right? So you have to put this impact in the retained earning of 31st March 2019. For example, the retained earning on 31st March 19 was 5 lakh. Now you are preparing 1st April 19 balance sheet. So you will just reduce 27,000 from 5 lakh. Likewise, you will add 63,000 in PP. You will deduct 90,000 in cash balance. Now, friends, when you pass this accounting entry in on 1st April 2019, whether these numbers will flow, in the next year or not, it's a balance sheet entry. These numbers will flow to the next year. Yes, yes, na. So in the next year, what you are required to do in the next year, 1920 comparative year, the depreciation was charged at 1,000. It should be 10,000. 9,000 rupee depreciation have been short charged. So what you will do? Simply on 31st March 2020, you will pass an accounting entry. Depreciation account debit by 9,000 to machinery account or to accumulated depreciation account. And in the comparative P&L, there is no third P&L. There is only comparative P&L. You have to add the depreciation expenses by 9,000. This will flow to your return earnings. Now what happened? This 9,000 depreciation will flow to your machinery, will flow to your cash. Your cash will be 90,000 only. Means your cash एक बार 90,000 कम कर दिया तो अब 90,000 अगले पीरियड में भी कम हो गया, राइट? और 9,000 का एडिशनल इंपैक्ट आपकी रिटेन अर्निंग्स में आ जाएगा. इज दैट क्लियर और नॉट क्लियर? If I compare my balance sheet numbers, what will happen? My 27,000 plus 9,000, I retained earning of 31st March 20, the wrong retained earning versus the correct retained earning, there was a gap of 36,000. And what is this gap? This gap is nothing. 4-year depreciation impact. 9 for 36,000. If I compare my cash balance of 31st March 20, earlier cash balance versus this cash balance, you will find there is a difference of 90,000, right? If you found my machinery balance, right? What is my correct machinery balance? 63,000. So what would have been my machinery balance on 31st March 20? Wrong machinery balance 6,000. 10,000 का मैंने ग्रॉस ब्लॉक माना, 4 साल का डेप्रिसिएशन 1,000. तो मेरा रॉन्ग नेट ब्लॉक क्या था? 6,000. मेरा सही नेट ब्लॉक क्या होना चाहिए? 1 लाख माइनस 10,000 मल्टीप्लाई बाय 4, 60,000. So what is the difference between 6,000 and 60,000? Plus 54,000. You will get 54,000 by 60 minus 9. Also, you will found 54,000. So on the asset side of the balance sheet, your balance sheet is dipped by 36,000 and your liability is also dipped by 36,000. Is that clear to everyone? ये समझ आया या नहीं आया? Anyone who is not clear on this aspect? Viraj is saying clear. Priya, Radhika, Priyanshi, Abrikesh, everyone is saying clear, sir. Okay, very good. Friends, now I'll discuss some questions here. Okay, please write down those questions. Number 1, sir, do we need to refile our old financial statement? Answer is no. You need to correct your comparative period and you need to correct your opening of the comparative period, right? Second question, sir, do we need to just give me a minute. I want to show you one listed company annual report also, so that you will be able to understand it beautifully. So allow me a second. I am opening ONGC Limited, and then I hope my voice is clear to everyone now. Whether this ONGC balance sheet is visible? Is it visible? Okay. This is the ONGC balance sheet for financial year 1920. Let me show you, this company has changed the accounting policy, right? Let me show you the balance sheet of this company. This is a big listed company, public sector undertaking. Can you see this balance sheet? This balance sheet is for the period 1920. So what is balance sheet date? 31st March 20. What is comparative date? 31st March 19. What is the opening date of the comparative? Can you see third balance sheet? Can you see the third column? Can you see the third column in the large listed companies annual report? Why this third column is there? Either there is a correction of prior period error, or there is a change in accounting policy. And can you see this asterisk mark, star mark? Can you see this? Thirty-first March 19 and 1st April 18. Yeah. See, the meaning of star mark is restated, refer note number 54. It means they have restated their comparative period, and they have also given the third balance sheet, which is opening of the comparative period, and that is also restated. Restated means, as I told you, the difference between 1st April 19 balance sheet and 31st March 19 balance sheet is the correction, Okay. Then they have the P&L. How many P&L? Two P&L. Because P&L is always for the period, not on date. So on the comparative P&L, they have again put a star mark. What is that star mark? They have written this as a restated. Refer note number 54. Then friends, they have given statement of changes in equity. In the statement of changes in equity, they have given the effect of changes in accounting policies, right? They have then given the statement of cash flow, comparative cash flow, and they have again put this star mark. Again, the meaning of the star mark is restated. Restated, refer note number 54. Let's go to the note number 54. This is note number 54, disclosure as per Ind AS 8 and Ind AS 1. Because the same provision is there in Ind AS 8 also. In accordance with Ind AS 8 and Ind AS 1, presentation of financial statement, the company has retrospectively restated its comparative balance sheet as at 31st March 19 and 1st April 18, which is opening of the previous period, opening of the comparative period. And the company has also restated statement of profit and loss for the year ended 31st March 2019. For the reason as stated below. And what is the reason? So let me tell you, the company ONGC Limited in 1920 has changed the accounting for government grants. They have changed the accounting for government grants. They have changed the accounting policy of government grants, and that is why they have to restate the comparative, and they have to also give the third balance sheet. What is the objective of third balance sheet? In case of change in accounting policy, to take the impact from the date of transaction till the opening date of the comparative period, so that your opening balance should be apple to apple, right? In the opening balance of the comparative period, this change in accounting policy impact has been taken. Then in the comparative balance sheet, it has been taken. And of course, current balance sheet is always okay, right? Is that clear? Likewise, in case of correction of error, as we have seen, in my Excel based example, what we did, we corrected the last three error, took the cumulative impact of the error in the opening balance sheet, so that my opening balance sheet, third balance sheet numbers are corrected numbers. Right? Right? And your comparative numbers, you have given the impact of just 1 year to correct your comparative number. जब आपका ओपनिंग बैलेंस ठीक हो गया तो फिर तो कंपैरेटिव में सिर्फ 1 साल का नंबर ठीक करना है ना, because balance sheet numbers carried down and brought forward. So this company has given the disclosure what they have changed, right? And then friends, they have given the reconciliation. It is required by Ind AS 8. They have given the balance sheet reconciliation. What was previously reported, what is the adjustment, and what now they are reporting for last year and for the third balance sheet. Every line item which is impacted. You're right, Sriya. P&L. They have given the P&L, what was earlier reported, what is the adjustment, what was the revised number, right? And they have also changed the earning per share. They have also shown the earnings per share. And they have clarified for every adjustment, they have given the note number, note referencing for every adjustment. They have also given the reconciliation of cash flows. And every adjustment they have explained with the number of impact, with the amount of impact. I believe now you guys have understood. Now you guys have understood that this concept of the third balance sheet, concept of the opening of the comparative period balance sheet with the real life example of a big listed company's ONGC Limited. Have you enjoyed this example from your real life? Yeah, correct. So now friends, I'll discuss some questions, right? Number one, sir, whether this third balance sheet is always the opening date of the comparative period balance sheet? Answer is yes, because the idea is to correct the, because you are presenting current year, you are presenting comparative year. So when you are correcting your comparative year, you need to correct the opening balance of the comparative year also, right? Because these numbers are flowing from the last year. So that is the idea. Sir, let's say if a company has a very immaterial error, Reliance Industries, they have thousands of crores of bottom line. They have lakhs of crores of top line, lakhs of crore of balance sheet size, and their accountant forgot to record a salary expense of rupees 2 crore. They have the accountant of the Reliance Industries forgot to record a salary expense of rupees 2 crore. And they are rounding off in crores, right? तो उनके लिए तो 2 रुपए हैं वो. They are rounding off in crores. So friends, is it a material amount for Reliance? Don't think about you or me. For us, it is a material amount. It is a big amount. But for Reliance, whether 2 crore is a material amount, it will not change your EPS. It will not change anything. If today I just heard that the accountant has forgot to record 2 crore, whether the stock market will go down, share price of Reliance will go down. Answer is no, it doesn't matter. 2 crore is just like 2 rupee for Reliance. Their net worth is 10 lakh crore. If your net worth is 10 lakh rupees and you lose 5 rupees, 10 rupees, 2 rupees, is it material for you? Yes or no? I'm just asking yes or no. No. So friends, this restatement of comparative period, this giving the third balance sheet, disclosing all these disclosures, reconciliation is only required when the correction of error is material, when the impact is material. If the impact is not material, then it is not required at all. Sir, in that case, what will happen? Let's say this accountant has forgot to record a salary expense of rupees 2 crore. Sir, where we will show it? You will just show it under salary expenses. So that error is as good as current year transaction. That's all. You are not required to disclose it separately anywhere, right? Where you are disclosing, where you are presenting and accounting your salary expenses for current year, this 2 crore rupees of salary has to be presented in the current year expenses itself. Second, sir, by this third balance sheet restatement of comparative, whether my income tax return will also change. Friends, this is financial reporting paper. गलतियां तो पहले भी होती थी ना, error was happening in the past also. So there is a change from IGAP to Ind AS. There is a change in the accounting and reporting mechanism. There is no change in Income Tax Act, right? Income Tax Return, Income Tax Act will go as it is, right? Clear? Is that clear? Yeah. Sir, for example, the company has made 5 errors. Viraj was auditing that company and he found 5 errors. Individually, all those 5 errors were immaterial individually. But collectively, all these impact of all these 5 errors collectively becomes material. Sir, whether we need to see impact by each error wise or consolidated impact on the financials, you have to see the impact on the financials. If the overall impact is material, you have to restate your comparative, you have to give the third balance sheet also, right? Is that clear? I hope the third balance sheet concept with the PPT, with my explanation, with the Excel example, with ONGC, I believe it is well captured, well cleared in your heart and in your mind. Yes, we discussed the component of the financial statement. We discussed in detail the concept of the third balance sheet, right, which is nothing opening of the comparative period. Now we are moving towards general features or overall consideration. What are the general features? What is overall consideration which we have to apply? We have to be mindful and meaningful while preparing our financial statements. Number one, presentation of true and fair view and compliance with all Ind AS. And compliance with all Ind AS. Number one. And you remember auditors are required to comment on they are required to provide opinion whether financial statements are reflecting true and fair view or not, right? Whether financial statements are reflecting true and fair view or not. Okay. So friends, true and fair view assumed through application of Ind AS. So what standard says that as a management, how will you say that my financial statements are reflecting true and fair? So Ind AS 1 says that just like a horse, you need to follow the requirement of Ind AS religiously. Just if you are following the requirement of Ind AS religiously, right? In that case, you can say that my financial statements are reflecting true and fair view. What does it mean? It means that standard says that it is a rebuttable presumption. It is a general presumption that if someone who is following the requirement of Ind AS, then the financial statements are assumed to be reflecting true and fair view. Number two, there is an additional requirement in Ind AS 1. In our old IGAP accounts, there was no any requirement to talk about. This statement of compliance. The management is not required to give any statement of compliance. Right? But now, Ind AS 1 says that the management has to give explicit and unreserved statement of compliance in the notes to account. Sir, what is meant by explicit and unreserved statement of compliance? Explicit means clear cut. Unreserved means without any qualification. Means you have to be objective, you have to be clear. For example, you will say that the financial statement of the company have been prepared in accordance with all applicable Indian accounting standards. That's all. So you are saying that the financial statement have been prepared in compliance with all the applicable requirement of Indian accounting standards. You are not saying that we have prepared our the financial statement have been prepared in accordance with Ind AS except the actuarial valuation related standard or borrowing cost related standard. You are not giving any disclaimer. You are not giving any qualification. You are simply saying that our financial statements are reflecting true and fair view. Right? So, friends, the compliance of Ind AS is a statutory requirement. It's a mandatory requirement. If you are complying with all the provision of Ind AS, it is well understood that your financial statement are reflecting true and fair view. Additionally, you have to give a statement of compliance. You have to give a statement of compliance that your financial statement are reflecting true and fair view. How to give this statement of compliance? Let me show you. In the ONGC balance sheet, you see this statement of compliance. This is a new requirement. This was not there in IGAP. Can you see the statement of compliance? Yeah. Can you see? The financial statement have been prepared in accordance with Ind AS, notified under companies Ind AS rules 2015 as amended from time to time, and guidance note on oil and gas producing activity issued by the Institute of Chartered Accountants of India. Can you see? They are saying that their financial statements are Ind AS compliant financial statement. And the header is statement of compliance. Right? Sir, can a company depart from the requirement of Ind AS? Yes. In extremely rare circumstances where the compliance of the standard would be misleading, right? And it would conflict with the objective given in the framework. Friends, if you are preparing a financial statement, you are also be very meaningful and mindful about the privacy of the stakeholders, right? For example, in a bank, the director has taken a loan. The director is a related party, and the director has taken a loan from the bank as a customer, not in the capacity of a director, but in the capacity of a customer. Means, if I would go to that bank and if my profile would have been equivalent profile of the director, the bank will charge 10% interest rate from me. And the bank is also charging 10% interest from the director. Right? Bank is doing all the policies, formalities, procedures while giving a loan to the director. So for this loan transaction, the relationship between the banker and the director is not a related party relationship. It is a customer relationship. And whether the company is disclosing the transaction with all its customers in its financial statement, answer is no. And if the director has taken a loan due to some exigencies for rupees 10 lakh, don't you think if this fact would have been disclosed, it will deter the privacy of the director? And RBI says that, and Banking Regulation Act says that if someone who is dealing in the capacity of a customer, you cannot disclose the confidentiality and privacy of that person. Is that fine? But our Ind AS 24 says that if there is any transaction with the related party, you have to disclose that transaction with the related party in the disclosure in the notes to accounts. Now, friends, you tell me, if I am complying with the Indian accounting standard, it will violate that statute or it will violate the privacy. If I'll not comply with Indian accounting standard, then it will violate the compliance of Ind AS. So what should I do? Ind AS 1 permits that in extremely rare circumstances where compliance with the standard would be misleading, right? In that case, you can depart from that compliance, and you will only depart if some regulatory framework requires or does not prohibit. Like in my example, Reserve Bank of India Banking Regulation Act requires not to disclose that identity, right? If it's dealing as a customer, okay? And if a company is departing from a compliance of a particular Ind AS, why? because the regulatory framework requires not to comply. In that case, specific disclosure is required. So they have to write that in case of one of the transaction with the director, in case of one of the transaction with the director, yes, you are right, Sriya. Sriya is asking, sir, fair view includes departure, as you said. Sriya, you are right. First of all, true and fair view will be assumed when you comply with all requirement of Ind AS. But in extremely rare circumstances, you can depart and still it will be considered as a true and fair view. What are those circumstances? Number one, if the management thinks that the compliance with Ind AS would be misleading, और खाली मैनेजमेंट के सोचने से कुछ नहीं होगा. Number one, if management believes that compliance with the Ind AS would be misleading and the departure from Ind AS is also required by the regulatory framework. For example, in my example, I am not saying that just because that director is a customer, don't disclose. Banking Act says that please don't disclose the identity of the customer, right? So number one, I am departing from the requirement of Ind AS. Why? Because some regulatory statute or framework requires. Number two, if I am departing, I have to disclose. I have to give the specific disclosure. Sir, what are the specific disclosure? I have to disclose that the company has given a loan. The company has given a loan. The company has given a loan to one of the director, right? In the capacity of a customer and on the arm's length basis and in line with the requirement of Banking Regulation Act or RBI Act, the company is not disclosing this as a related party transaction, right? And hence, limited to this aspect only, the company is not complying with the Ind AS 24. So whenever the reader and user will read this, he will be able to understand that. Correct? Sounds good? Sounds good or not? Right? Friends, now let's discuss the second aspect of overall consideration, going concern. Going concern. You remember the concept of going concern since your childhood? When I say childhood means from class 11, 12. What is the concept of going concern? It's a fundamental accounting assumption. And what is a going concern? Going concern means your concern. Concern means your entity will keep on going in the near future. Sir, keep on going in the near future means in the foreseeable future. Sir, foreseeable future means at least 1 year from the reporting date. When you are doing a business, when you are auditing, so you have a visibility that yes, at least 1 year from the reporting date, my company will not go anywhere. I will continue to do business. I'll continue to do business, right? So in that case, the company, the accounting has to go on a going concern basis, right? So going concern is a fundamental accounting assumption where the management foresee that whether the company is able to continue its business in a foreseeable future, which is 1 year from the reporting date, right? And while preparing financial statement, management will make an assessment of an entity ability to continue as a going concern, right? So friends, while preparing financial statement, management has to assess whether entity is able to continue as a going concern. And of course, entity will be able to continue as a going concern until and unless conditions would be satisfied. Means an entity an entity is required to prepare the financial statements on a going concern basis until and unless on a going concern basis until and unless, just give me a minute, until and unless yes, until and unless there is an intention to liquidate. The management, the management itself is saying we want to liquidate the business. If management is saying, then how can you keep your accounts as a going concern? Or the management himself is saying we want to stop the trading. The management started stopping the trading of the goods and services. Then how come you can continue this as a going concern? Or there is no other alternative except to do so, right? For example, friends, 7 8 years ago in the state of Bihar, what happened in the state of Bihar? So Bihar government has stopped the liquor business, and there was a very sound company in Bihar which was manufacturing and selling liquor in state of Bihar only. That company was a sound company, profitable company, big orders in hand, big reserves, big cash, everything is big. So on in the month of April 2016, in the month of April 2016, government come with an announcement that in next 6 months, all companies are required to stop their business in Bihar, stop manufacturing and trading of liquor in Bihar, right? Liquor in Bihar. So friends, tell me, we are talking about 1 year from the reporting date. On 31st March, we have to prepare the financial statements 31st March. These financial statements are getting approved in the board meeting in the month of May, let's say. In between, the government has come up with an announcement and saying that after September, you are not allowed to do business. Is there an intention to liquidate? Answer is no. Whether the entity stopped trading? Answer is no. But whether the entity has any alternative, because the entity is only working in Bihar, whether the entity has any alternative to continue this entity as a going concern? Answer is no, because its entire business will be impacted. Its entire business will be impacted, right? So you need to see whether this entity will continue to run as a going concern or not. Sir, what happened if the majority of the sale have been dropped? 90% of the sales have been dropped. In that case, can we say that going concern is alive? Friends, in that case, you have to see why 90% of the sales have been dropped. Is that product outdated in the market? If answer is yes, then of course you need to assess that will you able to survive in the business for next 1 year? If answer is yes, then it is a going concern. If answer is no, then there is a going concern. Fundamental assumption is defeated. Friends, do you remember an important fact? When COVID hit India, when COVID had hit India in 2020, so the lockdown was started in 23rd March 2020. The lockdown was started. And you know, at that point of time, when this lockdown was started, at that point of time, in April 2020, no any company was able to hold out any car. So the Maruti had a zero sales in the month of April 2020. Hyundai has a zero sales. Skoda has a zero sales. BMW, Mercedes, everyone, Tata Motors has a zero sales, zero. But whether those companies were preparing their accounts on a going concern basis, answer is yes. So the sale was zero. Drastically, it was stopped. But the reason was COVID, right? So it was not like that the government has banned the sale of the car. It was not like that the car was outdated. It was more due to COVID reasons. And that is why it was a temporary kind of impact. Timing impact was there. And that is why you cannot say that going concern has been impacted, irrespective of the fact that the sale was zero. Right? So you have to take the cognizance of all these aspects. So now, to cut a long story short, the company has to prepare its accounts on a going concern basis until and unless the management has an intention to liquidate, the management has stopped trading, right? And the management does not have any, or the management does not have any alternative except in doing so. Friends, if the company has a going concern, the company is keeping its business alive, but there is a material uncertainty. For example, the management, the government has come up with an announcement to ban one of its product of a company, and this could seriously impact the going concern of the company, right? Now the company has filed this case into the High Court, challenging the government decision, right? And the litigation was going on, and the court has told until and unless the verdict will not be announced, till the time the government will not ban this product. But the litigation is going on. If government wins, the product will be automatically stopped from selling from that particular date. So friends, although the going concern is there because the management believes that we will be able to win this case and we will be able to run the business, right? And probably it will take more than 1 year to get this litigation resolved. But whenever this litigation will come, it will concluded, and if it is not concluded in favor of the company, then probably the going concern will be impacted badly. So in this case, it will be known as a material uncertainty relating to going concern. So if there is any material uncertainty, in that case, you are required to disclose the material uncertainty relating to going concern. You can see the annual report of Vodafone Idea Limited. Vodafone Idea Limited, in their annual report for the year ended 31st March 2023, they have disclosed the material uncertainty relating to going concern. Their accounts have been prepared on a going concern, but they have disclosed the material uncertainty relating to going concern. If financial statements are not prepared on a going concern, you have concluded that I'll not be able to run my business for next 1 year from the reporting date. In that case, friends, standard says that in that case, you are not required to prepare your financial statement on a going concern basis. You have to prepare your financial statement on some other basis, right? For example, dissolution basis, realizable basis, liquidation basis. And you are required to disclose this fact, the basis why you have concluded that going concern will not be there, right? And reason for that. You are required to disclose all these aspects. Okay. Now let's discuss one of the case study. An entity is engaged in a plastic product manufacturing in a particular area. The entity is a profitable entity and has huge orders in hand as at 31st March 2020. The government has announced on 31st March 2020 to ban trading and manufacturing of plastic after 30th September 2020. So this entity is engaged in plastic product. It's a profitable entity, huge orders in hand as on 31st March 20. The government has announced on 31st March 20 to ban trading and manufacturing of plastic. After 30th September means after 6 months. Means the visibility is only for 6 months. After 6 months, there is no visibility. This is the only product in which the company is engaged. Advise the company on going concern aspect as per Ind AS 1. Tell me whether the company will continue to prepare its accounts on a going concern, or the company will not prepare its accounts on a going concern basis. Of course, no. In this case, although neither the company has stopped trading nor the company wants to liquidate, but there is no alternative except to do so due to government announcement within 12 months from the reporting period. Hence, there is an impact on the going concern and the company should not prepare its accounts on a going concern basis. Sir, what happened? If the company will challenge this in the court of law, in that case, the company has to disclose the material uncertainty relating to going concern. So friends, it's 9:40 now, as suggested by Board of Studies of ICAI. The last 15-20 minutes is for query session, right? Query, whether this query belongs to today's session or general query belongs to, some of admin stuff of.
So the faculty from Board of Studies, Shilpa madam is there, and she will be happy to answer your queries if there is any query other than this Ind AS 1 or introduction to Schedule 3, right? And if the query is there with respect to this particular standard or introduction to Schedule 3, whatever I have taught today, not whatever I'm going to teach day after tomorrow, right? So अभी तक मैंने जो भी पढ़ाया उसमें जो भी query है, I would be happy to answer. And students are requested to unmute themselves or raise hands so that we can unmute them and we will be able to answer their queries. Shilpa ma'am, are you there? So query is, let me read the query. Sir, how to get the PDF of these sessions? Shilpa ma'am, would you like to answer this question? Ma'am, you are not audible. Friends, Board of Studies of ICAI will upload these PDFs. Of course, I'll share this material to Board of Studies of ICAI. They will upload this, right? And you will get it from there. Sumit is asking, sir, explicit and unreserved statement can be given for any departure from an Ind AS. So, Sumit, first of all, explicit and unreserved statement of compliance saying that compliance with all Ind AS. And this departure of Ind AS is permitted by Ind AS 1 only, right? So Ind AS 1 gives you compliance. For example, crossing the red light. Crossing the red light is a non-compliance. But let's say if Act itself says that when you are into a learning phase, you can cross red light for once in a lifetime, right? So let's say when you cross the red light first time in the lifetime, for the first time, it is not a non-compliance, although it is a non-compliance, but it becomes a compliance as it is, provided by your act. So Ind AS 1 itself talks about that you can depart in respect of two, three circumstances. First of all, you can only depart from the requirement of Ind AS compliance when you find it misleading. Number two, when this departure is also accepted by the regulatory framework, like in case of Banking Act, right? So in that case, you can say that under statement of compliance, you can say that yes, the company has complied with, the company has prepared the financial statement in accordance with the requirement of all Ind AS. Then below the statement of compliance in the next para, you can write that, the company has given a loan to one of the director of the company. And of course, according to Banking Regulation Act, and keeping in mind the confidentiality of the customer, the company has not complied to the provisions of Ind AS 24 only limited to this aspect. Right, Sumit? Any other question, friends?
So now I'm audible.
Yes, madam, you're audible now.
Regarding PDF uploading, sir, students, I just want to add on further. The students, if you have logged into your BOS mobile app or your BOS knowledge portal, you'll find a tab there for your recorded lectures as well as the assignments and the notes of the lectures of these batches. So from there, you can go to the respective day session and there you'll find the assignments uploaded. For this session, we'll be uploading these assignments as soon as this class is over. We'll get it from the sir and we'll upload it immediately. Okay.
Question? Any other question?
Students, if you have any query, you can also unmute yourself and you can ask your query.
If anyone wants to speak in Hindi, so you can speak in Hindi, and I'll convert your query in English, and I'll also respond in English, right? For everyone. Sir, query box under BOS portal not functioning. So Sriya, I'm getting queries on the BOS portal also. I don't know why it is not functioning, but I'm getting query from many participants, many students on that query box.
It is not working for me. If sir, even let me also see chat box. Students, one more information I would like to share with you all is that all the recorded lectures of the previous batch will be uploaded again for this batch, because this batch we are running in a hybrid manner. It means some lectures will be live and some lectures will be recorded version. We'll give the schedule where we'll mention that based on recorded lectures, query session, your doubt raising sessions will be there, and you will be able to resolve your queries also based on those particular recorded lectures. We'll mention the topic also. So all the recorded lectures will be uploaded soon, most probably by the end of the day or by tomorrow or by this week. Everything will be of previous lectures will be uploaded. You can go through those lectures also. Some live lectures which we will be conducting, that also will be mentioned in the schedule for the May 2000 exam, this coming month. One question, sir, does that mean that today both Ind AS that applies to companies and Ind AS that applies to non-companies are notified through section 133? This question I think you'll be answering. So you're on mute.
Madam, this question was raised by Bindu, and I have already answered this question during my session.
Okay, okay. So students, do you have any query, or otherwise, sir, you want to continue with other concepts? Since we are having 10-15 minutes more.
Yeah. Any question, student, further? If you have any question. Any question on the query box? No. So friends, if you don't have any questions, let's discuss the concept of accrual, and then we will conclude this session. Okay. So let me share my presentation again. I hope my presentation is visible. Yes. Okay. As far as overall consideration is concerned, the concept is accrual basis. Do I need to discuss what is accrual basis? Are you aware about accrual basis, or should I discuss this accrual basis thing? Your childhood, you understand what is accrual. Accrual basis means, let's say, the company has made a credit sales. Okay, the company has made a credit sales. So whenever the company has made this credit sales, the company will record the transaction whenever the event has happened. Means the company is required to record debtors account debit to revenue account, not in the period when the company will collect the cash, right? So accrual basis means transaction and events are going to be recognized when they occur and in the period to which they are relate. Okay, it's not like the transactions are required to be recognized when the cash will be received. It is not like that. Okay, so students, accrual basis means when the transactions are happening, then only it is going to be recognized. The classic example is prepaid expenses. You are paying upfront, but you are recognizing the expenses over a period of time. That is why you are saying that prepaid expenses to bank, and then you are doing an entry expense to prepaid expenses. Friends, your financial statement has to be prepared on an accrual basis, right? The only component of the financial statement is cash flow statement, which has to be prepared on a cash basis. Otherwise, all the component of the financial statement has to be prepared on a accrual basis. Is that clear? Consistency. Consistency is very, very, very important. For example, you have a revenue from operation and you have other income, right? You have a revenue from operation and you have other income. In the current year, you have shown 100 crores of revenue from operations and 10 crore of other income. And what you have done, you have sold some fixed assets, and the profit on sale of fixed asset you have merged into revenue from operations, right? And 20 crore rupees belongs to profit on sale of fixed asset, which you were showing earlier in other income, but now in this year you have clubbed with the revenue from operation. So friends, your revenue from operation is 100 crore, which is not the right thing. In the last year, your actual revenue from operation was 80 crore, right? Which was right. In this year, you are showing this revenue from operation as 100 crore. But this 100 crore includes 20 crore rupees of profit on sale of asset. And why the company has clubbed this 20 crore in revenue from operation in current year? Because the company wants to show the growth in the revenue. Year on year basis, the company wants to show the growth in the revenue. And that is why the company has decided to club this profit on sale of fixed asset into revenue, which is not right. Friends, that is why Ind AS 1 says that the principle of consistency. It says that presentation and classification is required to be retained from year to year basis unless the change is required due to the change in operations. The change is required due to the change in operations, or a standard or an interpretation requires a change. For example, friends, when you read further, when you delve into financial reporting, Indian accounting standard, you will find, let's say you are using a building, you are using a building for the business purposes, means you are using your building as a head office or as a branch office or as a godown or warehouse. So whenever you are using a building for the business purposes, it has to be classified as property, plant and equipment. There is a separate standard, separate provision, separate requirement, separate policy. But when you use this building for earning rental, it has to be classified as an investment property. There is a separate line item, separate presentation is required, separate accounting policy, right? Separate provisions. Friends, since the business model has been changed, since the economic environment has been changed, the activity has been changed, now you are moving from using into the business to you are moving from renting out that property. And hence your accounting policy has been changed, your presentation has been changed, right? So friends, Ind AS 1 says that in all normal circumstances, you have to maintain the consistency in terms of application of accounting policy, in terms of presentation, in terms of classification, until and unless it is driven by a standard or until and unless it is driven by a change in the business operations, etc., etc. Right. So these were the two points I want to discuss in addition to this presentation of true and fair view and compliance with Ind AS, going concern, and accrual basis and consistency, right? The remaining concepts I'll discuss in the next class along with the structure and content of the financial statement. So Bindu has a question. Bindu, you can unmute yourself and can ask a question.
Sir, good morning, sir. Sir, am I audible?
Yeah, you're audible.
Yeah. So I have a question. So it was regarding the materiality concept that you were explaining. So what was that materiality concept? Was it an example, or you were speaking about 1% of the revenue or 10 lakhs, whichever is higher? Is that a requirement for the schedule 3, sir?
Yeah. So Bindu, for the larger audience, let me reiterate again.
Thank you, sir. Thank you, sir.
Materiality threshold have been given in Schedule 3, Division 2 to Schedule 3. And Division 2 to Schedule 3 says that any item of income and expenses, which is more than what? 1% of revenue from operations, or 1% of revenue from operations, or 10 lakh, whichever is higher. For example, a company has a revenue from operations of 15 crore rupees, right? What is 1% of that? 15 lakh rupees, right? So 1% of revenue from operation is 15 lakh rupees. And the next one is 10 lakh. So what is higher in between 15 lakh and 10 lakh? 15 lakh is higher, right? So in this case, for this particular company, more than 15 lakh becomes a threshold for presentation of income and expenses separately in the notes to accounts. So this will become a materiality threshold from the perspective of Schedule 3 of the Companies Act. And this threshold is given in the Division 2 to Schedule 3, which is applicable for CA final, right? This threshold was not there, the same threshold. The rule was there in Division 1 and Division 3, but the same rule is not there in Division 1 and Division 3. This rule is there in Division 2 to Schedule 3, which is applicable for Ind AS compliant companies and which is applicable for you guys.
Okay, sir. Thank you, sir.
I can see Dr. Rajkumar Adukia ji. Good morning, sir, and welcome.
Yeah, thank you, CA Dr. Alok Garg ji. You took the session from 7 o'clock onwards.
Yes, 7 o'clock. Yes, sir.
7 to 10.
7 to 10 is the time.
And my request is, Ajit, See, we put so much effort. Only 11 persons are on Zoom, including Epitom, including yourself, Ajit ji, and myself, and faculty. So please do a wide publicity of these sessions. The whole purpose gets lost when we have a lukewarm response.
Okay.
And Alok ji, look at our model papers also.
Sure.
2 model papers are there. See them, what changes can be made, how we can improve upon. Look at our study material also.
Sure, sir.
I would like to ask, session structure is 3-hour session and then 30 minutes question answer. Dr. Alok Garg ji?
Sir, the session timing is 3 hours, including Q&A. As far as I believe, the timing is 7 to 10.
Ajit, what is the structure?
Sir, final session 7 to 10 a.m.
No, but we have kept anyway for future session. Find out, because we have kept 30 minutes Q&A after the session. So make the session 7 to 9:30 and maybe 30 minutes Q&A, so that when the session is there, we take the session completely. Thank you.
Sir, this is how we took today. So basically, we have started asking queries at 9:30. When the queries got ended, then we started, explaining the other concept. And now then again query came.
Yeah, Alok ji, what I would request students who are on Zoom. Student, this is Rajkumar Adukia, Chairman. So if you have any query left, right, center on study module, other aspects, please ask me. Alok ji, you carry on, please.
Any queries on Ind AS 1 or Schedule 3 students?
Sir, I have a query.
Yeah.
Regarding these classes. Sir, these classes is for the examination purpose only. So, sir, the motive should be the board of studies, that the classes should be in a way that the student can able to solve the questions properly in the examination. So there should be more Q&A in the sessions also.
You are right. You are right. So basically, when you get into the asset related standard or liability related standard, where a lot of numericals are there, so of course faculties including me will solve a lot of practical problems, right? Schedule 3, it is more like a presentation related standard. If I talk about Ind AS 1, and I have just started the basics, when I come to current non-current, I'll take you through with a lot of practical questions on that. So this is how it will be there. Any other questions, students?
Sir, I would like to add on to his query, Smith, since you are asking for your preparation session, we'll take care that all the students, your queries, whatever is there, we are able to resolve it. But before that, we request you all to come prepare for the recorded sessions. The recorded sessions which we have uploaded, please go through those lectures and then attend the query resolving session, so that it will take the maximum benefit of those sessions. In case you come without going through recorded lectures, then you won't be able to appreciate, you won't have much of queries also, and you won't be able to appreciate what sir is explaining, that significant concepts and resolving the queries also of other students. You won't be able to appreciate much. So take the maximum benefit of this that query resolving session. It is always advisable is go through the recorded lectures before that. For live lectures, for the topics which will be conducting live lectures, like for financial instrument, we'll be conducting live lectures. So there you are not supposed to go through, you're not expected to go through the recorded lectures, but for the sessions where we will clearly mention in the schedule that this is for query resolving for these standards, please go through those lectures first. You are having some more queries for me?
No, thank you.
Okay. Any other student? In case
Madam,
you query,
Madam, good morning, ma'am.
yourself. Yeah, tell me, Bindu.
Yes, ma'am. Good morning, ma'am. Thank you for the sessions. Actually, ma'am, I have a query in general. The FR schedule is very clear and it is in the portal, ma'am. But regarding the other subjects like AFM auditing and other thing, ma'am. Can you please guide on that? Because for FR, the last session was there, this session was there, and whatever we need to go through the materials also, I think it is morning when I looked into it is there in the portal. But for the other sessions, maybe I'm missing. If you could please guide me.
Okay, see, Bindu, what we used to do is that we upload the schedule month-wise. So in case, because we are having two sessions,
Okay.
morning and evening, one paper for morning at final level and one paper in the evening. This is the way. So definitely in one day we'll be able to cover only two subjects. So, and when the entire syllabus of those two subjects are finished, then only we can move on to third or fourth subjects. However, in a week, we are having alternate day classes. So in that manner, we'll be having 4 subjects covered during a week. So once those 4 subjects are completed, then only we can move to the 5th subject. However, we'll ask the respective faculty to, you can do one thing, just put your query over, ask your query in the BOS mobile app to the respective faculty, subject faculty, and they'll answer you what is the exact schedule and how they'll be proceeding further. Okay. For financial reporting, I can answer you. For right now, we have uploaded only 3 lectures for the month of April. For May examination, so May month, we'll be uploading these sessions. What are the live lectures and what are the recorded lectures? And we'll be also uploading all the recorded lectures of the previous session so that you can go through as per your convenience. And we'll be covering majorly financial instrument, consolidated financial statements. This will be covering live. As of now, we are planning this. And with respect to other subjects, other chapters of this financial reporting, depending on the availability of the recorded lectures, the availability of the live lectures, we'll schedule it accordingly. Okay. Because we are attempting this batch is targeting November 2024 examination, and we are having limited time. So with hybrid version, we try to cover maximum by live class only, but we are having limited time. Sir, live class only, but we are having limited time. Actually, I think live class only, but we are actually, I think Rakesh ji, you want to ask something? You can unmute yourself and ask. You are on mute. Sir, you are still on mute. No, sir, we are not able to hear you. Your sign is showing that you are on mute. Unmute कर दो. Sir, we are not able to hear you. इनको अनम्यूट कर सकते हैं आप? वो कर सकते हैं अशोक जी. अशोक जी, आप अब राकेश जी को अनम्यूट कर सकते हैं? अच्छा सर, अब राकेश जी आप सॉरी Bindu ji, Bindu, in case your query has been resolved, we can.
Hello, ma'am. I'm audible now?
Yes, sir. Yes, sir. Now you're audible.
I'm audible now?
Yes, sir. Bindu, in case your query has been resolved, we can.
Hello, ma'am. I'm audible now?
Yes, sir. Now you're audible.
I'm audible now?
Yes, sir.
Yeah, ma'am.
In case your query has been resolved, I think you have logged in from 2 places. My voice is coming repeated to me only. So from one place, please आप अपना mic वो कर लीजिए बंद. At one place. My voice is coming repeated to me only. So from one place, please आप अपना mic वो कर लीजिए बंद.
Hello.
Yes, sir. Now please ask your query, sir.
It's okay, ma'am?
Yes. हाँ जी.
Ma'am, my query is when we look at the schedule, there are more than 1 lectures even recorded on the same day. For example, on 27, if you refer, there are afternoon sessions, there are more than. Now, how can we attend simultaneously all the lectures? Of course, they are recorded, so we can, listen to them later. But why, same date, same time, for example, on 27, direct taxes, it is, it's like that everything was, on 27. Even for yesterday also, there are repeating lectures. I mean, time is overlap.
I understand.
Uploaded lecture uploaded very late, ma'am.
No, sir, actually, no, it is, see, if you are going for both the groups, then it is possibility that you will find difficulty in going through all the recorded lectures along with the live lectures. However, those who are appearing group wise, for them, FR lecture, in case the student who is appearing for group 2, for them, group 1 paper is not relevant, my FR won't be relevant. So they require recorded lectures of FR because we are scheduling the doubt query sessions of DirectX also. Na? That is the reason we have done it. And as I told you earlier also that we are having some
hybrid
short of time. We are short of time for November 2024 examination. That's why we are going for this hybrid mode of recorded lectures and live lectures. In case you are not able to go through the recorded lectures, and because of that you are not able to go attend that live query session, resolving session, you can ask your query over your BOS mobile app, and the faculty, in-house BOS faculty will be guiding you. In case you have some queries and you are able to go through the recorded lectures at some later point of time, you can do in that manner also, you can resolve your queries. This is basically, there are many students who are going only group wise, they are preparing for the examination, so we have to cater them also. That is the reason we are going simultaneously for more than one recorded lectures.
But I can access live lectures on my laptop also, no? It's only on app.
No, both ways, sir. Both ways.
Okay.
This live, see, now you can access your live lectures through that recorded version. If you want to join like the manner you have done it right now, you can do it through Zoom platform also, and you can do it through that ECPL platform also. We have provided both the link to students and they can go as per their wish. We prefer through Zoom because there you can ask your query live instead of writing it over the chat. But as per your convenience, you can do it at both the places, and we are going through both the queries.
And one more thing, ma'am, on Zoom, the voice is very low. I mean, not as good as on BOS side. Right now, you are on Zoom. We are on Zoom, okay? So your voice is very low. On Zoom, BOS side, it is very good and very clear, crisp and clear.
So in that case, we'll talk to the Zoom people to just improve this, whatever technique.
I will raise a query to them also, ma'am.
Yeah, I'll do that, sir. I'll talk to the platform. I'll see to improve this.
Yes.
Thank you. Thank you. Welcome. I'm having one before Sumit. I know you have raised your hand, but just before that, I'm having one query from Prerna Sharma. In Sir Alok sir, this may be for relevant for you. In chapter 1, there is an illustration 6. I want to ask about it when Ind AS is as mandatory on holding because of subsidy. Then only looking on holding and other subsidiary when Ind AS mandatory on holding. Why not subsidiary? What is the reason why Ind AS is not extended to another subsidiary of such holding? It's very not clear, sir. Are you able to understand this query is there on the platform? Query portal?
Madam, even I'm not able to understand this query.
Acha. So, Prerna, I'll suggest you one thing. You can just please raise your query on Ask Your Mobile app, and I'll look this query and then I'll answer it. Okay. So that is the reason we are asking students to shift to this Zoom platform, because there you can unmute yourself and raise your query. In case somewhere typing you are not able to explain it properly and we are not able to understand, through direct this chat mode, instead of chat mode, you can unmute yourself and you can raise your query. However, because we are not able to understand your query and we are exceeding time also, we can do one thing. You just please raise your query on BOS mobile app and I'll be replying you. Okay. Any other student who want to raise any query on both the platform, Zoom platform or this Ask Your Query, this ECPL platform?
Thank you, students. Now I'm signing off.
Yeah.
Shilpa, signing off. Thank you.
Thank you, sir. Thanks a lot. Bye, sir.